Morning. Today is Wednesday, April 23rd, and this is a hearing of the House Insurance Committee. Members, take your seats, please. Madam Secretary, will you please call the roll?
Chairman Furman.
Here.
Present. Representative Bagley. Here. Present. Representative Bamberg. Here. Present. Vice Chairman Brown.
Here.
Present. Representative Freeman. Representative Galley. Representative Glorioso.
Present.
Present. Representative Green. Representative Hebert.
Here.
Present. Representative Henry.
Present.
Present. Representative Ilg.
Here.
Present. Speaker Pro Tem Johnson. Present. Representative Jordan. Representative Mandy Landry. Representative Mellorin. Representative Mita. Present. Representative Phelps. Representative Present. Representative Wilder. Present. Representative Willard. Present. You have 13 in a quorum.
13 members in a quorum. There are a few announcements before we get started. Please silence your cell phones. If you must take a call, please step outside of the committee room. If you wish to give testimony, please fill out a witness card completely, sign it, and hand it to our sergeant at arms. Your signature is an affirmation that the testimony you give is true. Green cards are for support, red cards are in opposition, and white cards are for informational purposes only. All witness cards are maintained in the committee records, including those for persons not wishing to speak. And we'll get started today with House Bill 122 by Representative Baralt. Ms. Keith.
Thank you, Mr. Chairman. Members, this is House Bill number 122 by Representative Baralt. It creates the Louisiana Roof Registry within Title 22, the Louisiana Insurance Code.
Thank you, Representative Baralt. Welcome to House Insurance Committee. Tell us about your bill, please. You're on.
Okay. Thank you, Mr. Chairman. Good morning, committee members. It's kind of fun to be in the room where all the excitement's happening, but I also hope I'm not here for a super long time. So, HB 122, just like it says, creates a voluntary roof registry within the Department of Insurance. The purpose is to be able to take advantage of all the fortifications of roofs that we're doing. When insurances have the information that they can more accurately assess risks, they can give discounts to homeowners. As importantly, when they have information about all the roofs that we have upgraded in an area, they can give discounts to the entire area. This allows for a centralized collection of that information. And to quote a very brilliant chairman, we're doing all this work to upgrade and fortify our roofs, and it's not going to do us any good if we can't prove it. So with that, I will answer any questions.
Question from Representative Willard.
Thank you, Mr. Chair. Thank you, Rep. Baralt, for bringing this bill. So this is optional for property owners to put their information into this registry?
The property owners or the local municipal governments that have that through permits, they can put it in as well. Yes, optional.
Okay, so is this, Mr. Patrick, if you want to introduce yourself.
Sure. Thank you, Representative Willard. Adam Patrick from the Department of Insurance.
Okay, is this a tool that, the state municipalities can use, hopefully, to start getting more mass discounts here? Because what we've heard is you have to have a certain percentage of saturation of a market with the fortified roof to start seeing discounts being applied to even properties without the fortified roof. Is that what this is about?
In a sense, Representative Willard, but it's not necessarily a discount per house. Now, if the homes have been built to a higher standard or since the new building codes went into effect, then that would be a repository for the insurers to be able to confirm that and give discounts for being upgraded to the building code standard. What it'll also do is add that saturation you're referring to, whether it's fortified or building code standards. Once enough in that area are upgraded to that standard, the reinsurance costs will go down. So once those reinsurance costs go down, effectively it's kind of like a discount, but it's not like going to be a line item discount.
So with the fortified fortified roof, you have to prove the certificate, you have to give the proof with the certificate to your insurance company to get that discount. For the upgraded building codes, I don't know what the process is to try to get a discount for that, but would this play into that process?
It would. It would be a repository so that insurers could more easily determine in a particular geographic area how many roofs are fortified and how many are up to building code standards, and frankly, even ones that took wind mitigation measures without necessarily going all the way to fortified.
Okay, sounds like a great bill. I'd like to make a motion to report favorably.
Okay, and we do have a few more questions. Representative Phelps.
Thank you, Mr. Chairman. Thank you, Rep. Willard, for those questions. And I just wanted clarification because I didn't have a chance to speak with Rep. Willard, but I know we've been putting forth funding on this matter for some time. Is this just stating that it's a voluntary registry that the Department of Insurance is going to maintain? They have the power and the funds to do that? We hear that a lot. You know, y'all aren't able
Yes, ma'am. And to be clear, it's not necessarily about the fortified standard per se. It's about any buildings that are built. If there's permitting done, it can be uploaded into the registry. So it's not going to necessarily require any funding because it's, folks will just upload that information to that database and then we'll vet it and, make sure it's good data.
You'll be able to maintain, monitor with the workforce, the employees that you have now. There's not an additional duty to maintain the database.
At this time, I don't think we anticipate needing additional staff for it. It'll be on it'll be data coming in sporadically as buildings are built. If we need to, we may come back and ask for that, but at this time, I don't think we need additional staff.
Okay, you said the magic word, if you need to come back. I'm just forward thinking.
Yes, ma'am.
Here. And this is just a voluntary, like you say, with the residents, and the information will be hopefully used. The bottom line is reducing insurance costs, and we won't see that realized for quite some time.
Well, reinsurers buy their reinsurance once a year, so if, the data that we get on the, front end seems as though a particular geographic area has a huge saturation of fortified roofs and building code roofs, that could affect the next reinsurance buy. And if their reinsurance goes down, their costs are lower, then they could afford to charge cheaper premiums. So it just depends on when we get that data, what it looks like.
Thank you.
Thank you, Representative Ilg, for a question.
Thank you, Mr. Chairman. Representative Baralt, thank you for bringing the bill. I got a couple of questions. When you, Mr. Patrick, when you say percentage of roofs in an area, in a geographic area, is that by zip code, or what are we dealing with geographic area? How does that break down?
Yes, sir. Thank you for the question, Representative Ilg. It would depend on how that insurer does their book of business. If they specialize in a particular zip code, writing a lion's share of policies there, then that may be sufficient. Or if it's, the entire Southeast region, or, just whatever their book of business looks like, if enough of that is saturated, they could have cheaper reinsurance.
And what would you, is there a specific percentage of roofs that need to be in the registry that qualified? Is there a threshold?
There's not necessarily a threshold. It's just having that better data. They're able to present that to the reinsurers and negotiate a cheaper price, which then would translate into cheaper or less loss cost so that they could charge cheaper rates.
Okay. I appreciate you answering my questions. Thank you.
Rep. Wilder.
Thank you, Mr. Chairman, and again, thank you, Rep. Baralt, for bringing this. Just a question I got a text message on for some clarity. Will this bill give the commissioner any ambiguous authority to create fines for businesses that do voluntarily register? It says the commissioner makes the rules, so the question was wondering if rules can also be made with a fine for any violation therein. It doesn't seem like it, but I think we're just asking for clarity. I suppose the commissioner would answer that.
Well, Representative Wilder, in order for the commissioner to take any kind of authority through regulation, it would have to be spelled out in the law as to what the scope of that power is. This bill allows for the commissioner to promulgate rules to implement the program. I don't believe there's any enforcement mechanism contemplated therein.
Duly noted. That was a request to ask. Thank you.
Yes, sir. Thank you.
No more questions. The board is clear. Look, I think it's a great idea. The more information we have, the better decisions we can make. I hope it's the process is easy. I guess there'll be an online portal or something like that.
Yes, sir. We'll spell all that out in reg, but for most municipalities that upload their data would be through an online database. That seems to be the easiest manner of doing that. We may have some kind of paper mail-in way, but online would be the primary way.
Good. Well, we've got a motion by Representative Willard to report House Bill 122 favorably. And seeing no objections, House Bill 122 is reported favorably. Thank you, Rep.
Thank you.
Good job, good job.
All right, and next up, we'll take up House Bill 148 by Representative Wiley. And on the previous bill, I'll read in, we did have some green cards in support. Commissioner Temple in support, present, not wishing to speak. Adam Ducote with Virgil Strategies, present, in support. Natalie Stewart Cooper with PIA in support. Clyde Boney, PIA in support. Lenny Kapowski, Magnolia Strategies in support. And Mike Norris, I guess representing himself, in support. And also we had a white card for informational purposes with Adam Patrick and also Brad Hassert, Contract and Licensing Board, also was willing to provide information if necessary. So next up is House Bill 148. Ms. Keith.
Thank you, Mr. Chairman. Members, next is House Bill number 148 by Representative Wiley. It requires insurers to provide prior premium amounts with renewals of certain insurance policies.
Rep. Wiley.
Thank you, Mr. Chair, and members and ladies and gentlemen. In my short tenure here, I've heard so many bills be presented and led in with this is a simple bill. Well, it doesn't get any simpler than this bill. But I will just tell a personal story. If you're like me, each and every year you look for that envelope if you have a long-standing carrier and a renewal, and you look for the bill and the envelope that comes typically in December for us, and you sneak up on the envelope and you open it up and you peel it back and you see the premium costs for that upcoming year. And you take a deep breath, and then you're just not sure if it's you're pretty certain, shall we say, at least of late, that there's going to be an increase, but you don't know how much. And you look at the number, you say it seems like a lot, but you're not sure. You don't know how much. So then what do? If you're like me, you go look somewhere in the back where it's filed, the insurance policy, and you look and see what we paid last year. I'm looking for a user-friendly, consumer-friendly, easy way to be able to see what it was last year and what it is this year. It creates clarity on the increase or the decrease, and quite frankly, I think it also, in some psychology, requires the insurance company that's levying the increase or the decrease to own the number, all right? So that's basically what it is, and I would invite questions if need be, Mr. Chair.
We've got a question from Representative Willard.
Thank you, Mr. Chair. Rep. Wiley, I think this is a great bill. I don't know if it does anything to lower rates, but I believe in transparency. This is a transparency bill, so at the appropriate time, I'd like to make a motion to report it favorably.
Thank you. Rep. Jordan.
Thank you, Mr. Chair. Excuse me. Thank you, Sheriff, for this bill. Excuse me. I would tell you, I do think that this is going to help because, there have been studies that have shown that most people could potentially get a lower rate if they would shop their policy. And I think we get into this mentality of sort of like the frog in that boiling pot of water, and they slowly raise that temperature on you, and then before you know it, it's gotten to a point that is unsustainable. But I think this does help people because if they see that increase and it shocks them, then I think it's going to invite them and be a catalyst for them to go and maybe shop around and see if they can get a cheaper rate. So I appreciate you, Bill.
Thank you.
Representative Phelps.
Thank you, Mr. Chairman. Sheriff, are you saying that I can stop keeping my prior year's premium with the cost for the prior year and not keep that one and compare it? It'll be on one form? Is that what you're telling me?
That would be, Rep. Phelps, that would be a personal choice, right?
But normally that's what I do. I keep the one from the year before and compare it
right.
to next year. But, and actually,
Normally what I do is put it somewhere, and then I got to find where it is.
yeah, that's where,
Right.
so we're on the same page.
Yes, ma'am.
Yes, sir, thank you.
Yes, ma'am.
All right. Well, believe it or not, I completely agree with Representative Willard and Representative Jordan. I think it's a great idea. And just anecdotally, I'll say this is when I'm talking with people who go out and they're shopping for better rates, and the agents may hate to hear this, but look, the old days of staying with Allstate or State Farm or whoever for 20 years is over, I think, and consumers who get out there and shop and look for competitive prices, I think they're finding that oftentimes they get lower quotes on homeowners and auto, and so there's just another tool for policyholders. I think it's a great idea. We've got a motion from Representative Willard to report House Bill. Well, I'm getting ahead of myself this morning. We do have a few green cards in support. Commissioner Temple, President in support, not wishing to speak. Clyde Boney with PIA. President in support, not wishing to speak. Natalie Stewart Cooper, PIA, and Mr. Mike Norris, President in support, not wishing to speak. And we did have a white card for informational purposes from Adam Patrick with the Department of Insurance. We have a motion to report House Bill 148 by Representative Willard favorably. And seeing no objections, House Bill 148 is reported favorably. Thank you, Representative Wiley. And let's hear House Bill 345 by Representative Weibel. And at this time, it is also my great pleasure to introduce our newest House Insurance staff member, Miss Adriana Johnson, legislative analyst, and she is going to introduce this bill and tell us about some technical amendments, I believe. Ms. Johnson.
Thank you, Mr. Chairman. Members, this is House Bill number 345 by Representative Weibel. It provides for notices relative to residential property insurance. This bill does have technical amendments. This is amendment set number 1411, as identified in the top right-hand corner. This amendment set has been posted online and distributed to the members. There are two amendments in this set, and the amendments are technical in nature.
Thank you, and I'll move to adopt the technical amendments, and seeing no objection, the technical amendments are adopted. Rep. Weibel, on your bill.
Thank you, Mr. Chair and members of this committee. This is my first time to appear before this esteemed group of colleagues, and it is quite an honor. We also have an amendment in concept, I believe, that would amend the 45-day notice to 60-day notice.
Why don't you tell us a little bit about the bill as currently constructed, and then let's talk about the amendment in concept.
Okay, so the bill itself increases the time of notice for consumer policies of non-renewal, also provides for some reasons of non-renewal, and if amended, would be a 60-day notice, which would align it with commercial policies. As I said earlier, this bill also requires insurers to include the reason for cancellation or non-renewal in their notice for homeowners' policies. Currently, there are different time frames for sending cancellations or non-renewal notices depending on the line of coverage, and this can create confusion among consumers, providers, and others. And we wanted to provide some consistency in that notice, and also to help our consumers to deal with a non-renewal or cancellation. And it's really interesting. I got this bill and I thought, okay, well, this is pretty straightforward and this is a great thing to help people out. And somehow or another, I've had constituents and friends, whether I'm at church or the grocery, talk about getting, hey, you know, I got dropped this notice, my homeowners is not being renewed, or this is happening. And it really is a tight window of time with sometimes limited providers to find a new policy. So it just seems to be a good consumer move for us. And with that, I will entertain any questions.
Okay. Rep. Henry, can we go ahead and take up the amendment before your question? And so, Representative, so I'll motion to adopt an amendment in concept extending the 45 days to 60. Is that correct?
That's correct.
Okay. Any objection to that amendment? Okay. That amendment in concept is adopted. Representative Henry?
Were you going to ask me to sing for you, or we could sing "Hey Fighting Tigers"? It's LSU Day.
Representative Weibel or Mr. Patrick, either one of you can address this. So I'm going to get, apparently Ms. Keith is privy to some of these conversations that may have taken place this morning about another amendment in concept. So I'm going to get her to give us an overview of that, and then let's talk about that.
Thank you, Mr. Chairman. In addition to the amendment originating in committee, which you just spoke of, the request is also to change other areas of present law where the time frame for an insurer to provide notice of cancellation is 20 days prior to the cancellation. And so the amendment this amendment set that is not yet reduced to writing will change the time frame from 20 days to 60 days prior to the cancellation of a policy. And this will include a change within the definition of renewal, which is found in revised statute 1266, paragraph 5. And this same amendment to change the notice time frame from 20 days to 60 days will also be made in other appropriate places within revised statute 1266 and 1267. That will conclude the remaining portion of this amendment originating in committee that is not yet placed in writing.
And Chairman Furman, I could touch on that if you'd like.
A little more clarification.
Okay.
So in addition to the changes from 20 days that are in present law to 60 days, the other portion of this amendment originating in committee will change the bill, which is now set at 45 days to 60 days as well.
Thank you. And Mr. Patrick, why don't you talk about the proposed amendment originating in committee, and then we'll move to adopt it.
Sure. So members, currently there are all these different timeframes in the law for commercial property, commercial auto, private passenger auto, and residential. What this does is harmonize all of those to be a straightforward 60 days, all of those provisions. The current bill is just homeowners, so it just brings in those other three lines of coverage and makes all of that uniform to 60 days to give everyone the same notice and help out agents who are explaining that to consumers to keep a handle of what the timeframes are.
All right. Rep. Jordan for a question.
No. What?
You okay with adopting the amendments?
I am.
Okay.
Yeah, no problem.
All right. So, members, does everyone understand the amendment set that has been proposed? Okay. Seeing no objection to the amendments originating in committee, those amendments are adopted. Rep. Jordan.
Thank you, Mr. Chair. And I don't know if this is a question necessarily for Rep. Weibel or for staff, but maybe somebody else in the industry might be able to help me if you can. So I like your bill. The only question I have is, let's say, okay, we're making it 60 days for a non-renewal, and the portion of your bill, I guess, that says that the insurer shall include in the notice the cause for which the insurer is failing to renew the policy. I don't know, let's just say that you have a roof, they say it's a roof that's more than 20 years old or whatever. In that time period, if you mitigate that and you correct that, I mean, what's the standard? Does the insurance company come back and say, well, now we can renew you? Or how does that, does anybody know exactly how that works?
Yeah, thank you for that question, Representative Jordan. And you kind of touched on the intent behind that is to inform the consumer. So rather than just getting a non-renewal notice, they have an idea of what made their property, unattractive to be insured. So if the insured fixes that within that 60-day time frame and informs the insurer could opt to renew the policy now, but they may not want to. But in either case, the consumer is now informed instead of being in the dark as to why their policy wasn't renewed. And if they fix that measure and that insurer doesn't want to renew them, they still have a better risk that they could shop around and get a better policy.
I was just trying to figure out if there's a requirement that if you mitigate within, and let's not say within the 60 days, let's say if you mitigate it within the 30 days, so that still gives you a 30-day window now that they would renew or what have you. But I can talk offline with industry or somebody about that.
Yes, sir.
Thank you. Representative Henry.
Originally, I didn't have a question. I was going to help him out. But so what are we moving? Most of them are going to 45 days and some of the sections are going to 60 days? Or all is going to 60 days? Okay. All right. So it's a consumer-friendly bill, I would assume. All right. Yes. Well, originally, I was just going to take this opportunity to move favorable before Rep. Willard. So I'd like to do that at this time.
Well, since he's not in the room, I think you beat him to it. Representative Glorioso.
Thank you. My question's for the commissioner. So let's say I have a homeowner's policy and it's going to expire on May 1st. And I get a notice of non-renewal on April 1st. So does that extend my coverage for 30 days beyond the term of the policy?
No, it doesn't extend the term. You're just having an additional 60 days notice that they're going to know.
What I'm saying, so if they don't send me the notice until April 1st, and my policy is set to expire on April 30th.
They have to abide by the 60 days.
So I would have an extra 30 days of coverage under that rule, correct?
If they had not, if they aren't following the regulations,
right,
then they cannot issue that notice of cancellation in that shorter time period.
And per case law in Louisiana, simply sending me a bill or sending me something that says the policy expires is not the same as a notice of renewal. We require a separate notice of cancellation or notice renewal. So they would have to send that 60 days out, and if they don't, it could extend coverage for a short period of time, so people have time to find more coverage.
That sounds correct.
Because one of the issues we have in my area, obviously, is they get these notices non-renewal during hurricane season, right, and it's very difficult to find a policy. And so I support the bill, and I think we should also look at in the future whether any other states have a situation where we require policies to not terminate in the middle of hurricane season, because it is very, very difficult for people in coastal areas to get a new policy in the middle of hurricane season.
Well, and Rep. Glorioso, as Representative Jordan said earlier, one of the things that we're seeing, and I think part of the intent of this bill is also to help people know if they are going to be non-renewed, to go out and shop, because we do hear stories constantly of people getting lower premiums in the current environment, not because they renewed with their carrier, their existing carrier, although as I've testified, we have companies that have filed for rate discounts, but because they've switched carriers. So I think this helps promote the fact that, promote the shopping around, if you will.
Well, absolutely. I appreciate that. I do want to say, based upon, your leadership last year and the bills that this body passed, I can tell you from my own personal experience, my homeowners, I was able to get multiple quotes, and I was able to save about $1,500 a year. And I live on the Lake Pontchartrain. And on some rental properties we have in St. Bernard Parish, also in a high hurricane exposure area, our only option for the last 3 years was Citizens, and a new company came in and wrote those policies and saved us about $35,000 a year. Wow. So what we're doing here in this body is bringing down homeowners insurance and bringing competition into the market. So I appreciate everything that this body has done that you helped us do.
And I appreciate that testimony.
Yeah, and look, and I want to echo what Rep. Glorioso just said. I'm hearing the same stories when I get out there and talk to constituents. People have options where, in just 2 or 3 years ago, they did not have options. And so certainly think we're moving in the right direction. Thank you for that, Commissioner. Rep. Willard.
Thank you, Mr. Chair. Good morning, Commissioner.
Good morning.
Just a quick question. Do you have any update on non-renewals since the 3-year rule was repealed?
That has not gone into effect yet. We've
Okay.
just finished promulgating that rule, so there are no policies being canceled as a direct result of the 3-year rule.
So the rule hasn't taken effect yet?
That's correct.
Okay, thank you.
Thank you. Representative Bamberg.
My question is around the non-renewal. If they don't get the non-renewal in 60 days prior to their renewal, I would assume that they get renewed and they get another year on their policy, not another 30 days. There would be a cancellation would be handled differently, but a non-renewal, I don't know that I would think that if they don't abide by the rule and give them 60-day notice, that the consumer would actually have another year on their policy.
Well, Representative Bamberg, I think in most insurance policies, it is term limited to that year. So that notice of non-renewal is just letting them know that they're not going to offer them a new policy. So as far as I'm aware, and I can get with our PNC folks to verify this, I don't think insurers typically include policies, their homeowners policies that auto renews.
But if they have a non-renewal notice go out and it's 30 days prior to their renewal,
right,
I would assume that they get the whole next year because their renewal notice their non-renewal came out too late.
Yes, sir.
I mean, they got to play by the rules as well.
Well, and I believe that there, as Rep. Glorioso mentioned, there's case law on that where the courts have required, because the notice wasn't sufficient, because it was too short. I think there's some cases of like 20-day notice, 15-day notice, and they required the insurer to reissue a proper, with the proper timelines in order for that non-renewal to take effect. So the policy effectively was carried over until that non-renewal notice timeline was satisfied.
Okay, but a non-renewal means they're not renewing it, so they can't say they're not going to non-renew it until the next policy term. Cancellation could be handled differently, I would assume. I don't know, it's semantics, but obviously we're going to try to give them 60 days to get new policy, but I believe if you miss the date on the non-renewal, you're going to bump up against the next non-renewal is on their policy effective date.
And Representative, this bill, should it become law, would go in effect January 1st of next year. So obviously we'd be working with industry to make sure that they understand what the rules are so they can be in compliance.
Perfect. Thank you.
Thank you. No more questions. We do have a green card in support. President would like to speak. Ben Albright with Independent Agents. Ben, if you want to go ahead and come up at this time. Where is Ben? Yep. You're up, Ben, on House Bill 345.
Yeah, sorry, I'm a little behind in the hallway
That's okay.
there. Benjamin Albright with the Independent Insurance Agents of Louisiana. I just wanted to support this bill. We have all the time insureds that get the non-renewal, and it's difficult to get a new policy put together. It's a difficult market right now, as everybody knows, and that makes it very challenging to go find a new carrier in a lot of cases. And so we wholeheartedly support this bill. I think it's a good consumer protection. You have seen me testify on a number of bills in support of things that the insurance companies like. They're not really going to like this one, to be honest with you, but I think this is a reasonable one that is a good policyholder protection, should not impact rates, and is only good for the policyholders of the state.
Thank you. And we do have one red card in opposition. President will provide information if necessary from Kevin Cunningham with APCIA. I don't think we've got any questions for Mr. Cunningham. We've got green cards in support. Present, not wishing to speak. Natalie Stewart Cooper with PIA. Clyde Boney with PIA. Kevin Hayes with the Louisiana Landowners Association. And also Mike Norris. I just can't read who he's here on behalf of, but we've got a green card for Mr. Norris. Also, Commissioner Temple, present and in support. Clinton Dozot, PIA. Danielle Dozot, PIA. All present in support, not wishing to speak. No more questions. We've got a motion to report House Bill 345 with amendments by Representative Henry. And seeing no objections, House Bill 345 is reported with amendments. Thank you, Representative Weibel.
Mr. Chair, members.
And let's move now to House Bill 121 by Representative Adams. Ms. Keith.
Thank you, Mr. Chairman. Members, this is House Bill number 121 by Representative Adams. But prohibitions relative to public adjusters and home improvement contractors.
Thank you. Representative Adams, tell us about your bill.
Good morning. Good morning, Chairman and Committee. House Bill 121 is to do with home inspections. I call it inspections, but anyway, come out and look at your roof or anything. We don't want them to be able to look at the roof and also put a bid in, run the price up, and trying to get it to where it's reasonable for the homeowner. And we have.
Okay, thank you. We've got a question from Speaker Pro Tem Johnson.
Morning, Representative Adams. How you doing?
I'm good.
Is this bill designed to prohibit what we see a lot of after a hailstorm, or not even after a hailstorm? We're having folks that just show up in neighborhoods really not even related to an event. They're going door to door to door to door, and they're saying, hey, you might have a hail damage, let me write it up, even though there hadn't been a hailstorm. Then they write it up. They may send it to their insurance company and make them come out, and they've already signed a contract.
Speaker Pro Tem Johnson.
To do the work.
Speaker Pro Tem, hold on 1 second, please. Sir, would you mind finding a seat and?
No, he's an interpreter.
Oh, he's an interpreter. Okay. Okay. Oh, we're trying to get you in the on the screen.
Push back a little bit.
Put you in the picture there.
I thought I was talking to you.
Yeah.
What the hell?
Trying to get me in that.
He's down.
If I'd lower my head, but I don't think that works. Okay.
Thank you.
Are you going to correct my grammar when you?
I think you were talking too fast.
Let me start over.
Hold on 1 second. Hold on 1 second.
But I want to.
All right. I think we're good. Sorry about that. Thank you for being here this morning. Speaker Pro Tem.
Representative Adams, is this bill going to eliminate or prohibit the kind of action that we see where folks will just show up in a neighborhood, go door to door, and it's ironic, they go to every door and say, you might have hail damage on your roof. I'd like to sign a contract with you. We'll get the insurance company out here, and if they do it, I'll do the work.
Yeah.
That's what this is designed to do.
In my district, a lot of that's happened at homes. I had a little 87-year-old lady that came after a hailstorm, and they climbed on the roof and told her that her insurance, she had no idea. They filed everything with the insurance, and her son said her roof wasn't hurt, that he went up and looked, and it was just a nightmare for her. And now, of course, insurance rates went up because she made a claim.
Well, it also bogs down the adjusters because a limited number of people to go out to look at legitimate claims are now having to go to every single house. But that's what your bill would do.
That's what it would do.
Does it also, there's a publicity or an advertisement provision of that bill also?
Yeah, I can help explain that. Darren Bovard, representing today with the Louisiana Roofing Contractors Association. Yeah, we basically, at its bones, prohibit the solicitation or advertising for insurance claims.
This will get rid of the giant inflatable gorilla that they put in a parking lot after a hailstorm.
Like, we can be your claim specialist. We'll waive the deductible. We'll do all these things. We'll talk to your insurance company for you. To all these things that are currently already prohibited in insurance law. This just really lays it out that contractors cannot say those things and cannot talk about.
And then does the work.
Correct. Now, there's a piece in the beginning of it to where a public adjuster cannot also be a contractor, because there's a practice of that to where they'll go adjust a claim and take that hat off and put another hat on as a contractor and then get to work as the roofing contractor.
And of course, the unthinkable, I mean, it's unimaginable that anybody would do this, but this prevents them from having billboards that say you might have a claim.
Correct.
Okay. Can we extend that to any other professions?
Well, I think there's a bill an amendment in concept that I think we'll be working on the floor to expand it to all contractors and not just roofing contractors.
Okay. Contingency contracts also?
Yes, that's in this bill.
Thank you. Good bill, Representative Adams. Thank you.
I've got a couple of questions, and so I guess roofers have kind of gotten a bad reputation. I used to own a roofing company, and we did specialize in insurance claims, and so your bill would not prevent roofers from coming out and doing damage assessments or providing bids. I mean, that is a valuable service that roofers provide following a storm. In fact, I know a lot of agents will advise homeowners to, hey, call your roofer, see if it really needs to be replaced, can it be repaired, go ahead and get a bid. This bill would not prevent those sorts of services from roofers, correct?
That's correct.
Okay.
This would just really look at the solicitation and the advertising for the claim itself. Like to go in there and say, you have a claim, I'll take care of your claim for you. That's what really public adjusting is. So it's just keeping those two industries that are both licensed separately out of each other's lane.
Right. No, I think that's something we need to do. Now, another question. So on page 2, starting line 7, a contractor or subcontractor repairing or replacing the roof of a residential or commercial property insured in this state shall not advertise, solicit, or provide insurance claims handling, processing, or any policy interpretation related services to the insured, including but not limited to contingency contracts prior to the insured's initiation of an insurance claim. So is there an opening there for a contractor to provide some insurance claims consulting or claims handling or policy interpretation after the initiation of a claim? I don't think that was the intent, but the wording there prior to the initiation of a claim, is that problematic? Am I missing something there?
Well, I think that language too also goes to that we understand that there's going to be probably some correspondence between the roofer that, when the customer accepts that estimate or accepts that bid, there might be some correspondence between the insurance company and the roofer, but it's that interaction that locks that customer in with that initial contract before a claim is even filed. So we wanted to be specific to say those, hey, we'll get up on your roof, we'll take a look at it, but here, sign this first, before anything is even established that a claim even needs to be filed.
Right. No, again, I think that's the most important, the most important problem to address. But that's maybe something we need to tighten up is to, you don't want roofers giving coverage information after the claim has been filed, just like we don't want them giving that information prior to the initiation of the claim. We've got a question from Representative Jordan.
Thank you, Mr. Chair. I'm going to follow up on one of the questions I think you asked, and maybe I misunderstood it, but this portion where they saying solicit, because I can tell you we just had a few months ago we had a hailstorm in my area, and one of the roofers, he was working on a couple of the neighbors' roofs, and as he was working, he stopped by the house and said, hey, look, I'm working on a neighbor's roof down the street. Can we take a look at your roof? So I'm assuming that, well, under my definition, I would say that's solicitation, because nobody asked for them to come out, but they were in the neighborhood, so they asked could they check and do an assessment. This would prevent that, I'm assuming.
As I see it, no. This is the solicitation of the insurance, the work as an insurance claim. Like it's not what you do, it's what you're saying. But I can tighten that. We can tighten that.
It doesn't say that though. It says you shall not advertise, solicit, or provide insurance claims handling related to the insured. So I mean I don't know.
If I may, Adam Patrick from the Department of Insurance. It does say shall not advertise, solicit, but it's narrowly tailored to those particular items, insurance claims handling, processing, policy interpretation. So if they're soliciting to get up on the roof and just assess if there's damage, that's not claims handling. That's just ensuring that, verifying whether or not there was damage to the roof. So I don't think that would be necessarily encompassed within the scope of the current language.
And it might be a comma or something that we need to
Well, I think the way, I think the way you got it, I would probably disagree with you, but that's okay. That's why I'm asking the question. I do think that probably needs to be tightened up a little bit. The other thing is, I don't know exactly how you, and again to the chairman's point, I don't know how you're going to enforce this because, look, some people are. Look, we've all dealt with roofers, and that's what they say. Hey, look, we'll fix your roof. We'll deal with the insurance company for you. We'll handle the claim. And some people want that. They don't want the headache of having to go and deal with that, and they don't want to necessarily hire an attorney to go and deal with the insurance company to handle a claim. So if the roofing company or the contractor is going to deal with it, even though, it isn't the best process, that happens in the real world. And so the real question is, and especially when you got this prior to the signing of the contract, once you've got that signed contract and the guy says, well, look, I didn't tell them beforehand, they signed the contract, and after they signed the contract, that's when I did it. I mean, how are we going to get into that unless you're recording the conversation? So I just, I understand what we're trying to do, and I'm in favor of what you're trying to do. I just have a few questions about practically how we're going to enforce this. So, all right. Thank you, Mr. Chair.
And Representative Jordan, we do have white card from Brad Hassert with the Contractor Licensing Board. Might be a good time to. He's willing to provide information. Mr. Hassert, are you here? Would you like to come up and could you address Representative Jordan's question about enforcing this if it becomes law?
Sure.
Somebody's got to get up. Yeah.
It's not true. Good morning, Mr. Chair, members. Brad Hassert from the Contractors Licensing.
Mr. Hassert, I'm sorry. Representative Glorioso has a question. He's got to go to another committee, and let's let him ask his question.
Just real quick, I appreciate it, Mr. Chairman. I support the bill, and I tried to bring something similar to this last year. I just wanted to make a suggestion because I think what Representative Jordan was saying, we just need to tighten the language up a little bit. So I would suggest we look at in the first sentence, just removing or the part about the subcontractor, the roofing part, and just making it any contractor or subcontractor shall not advertise, solicit, or provide insurance claims, handling, processing, policy interpretation related services to the insured, period. Then there should be a separate sentence that says that a contractor or subcontractor shall not enter into a contract that is contingent upon coverage or payment by an insurance company. That should be a separate sentence. And then I do think we need to have a provision in there that allows, if I, as the homeowner, hire a contractor to do work, and I make the claim myself, so they're not involved in the claim, but the contractor in doing the work sees other damage and tells me about it, there should be a process where they can give me that data in a report that I submit to my insurance company, because that is a good practice. And as everyone knows, sometimes additional things are found once you start taking apart. And so I think we can tighten that language up and get to something I think that works for everyone and accomplishes what we all want to do here. And I'm happy to help you work with that.
Thank you.
Thank you. Thank you, Mr. Chairman.
Thank you, Mr. Hassert. Sorry about that.
I don't even remember what your question was, Mr. Chair.
Enforceability of the. So my real question is, and look, some of what Rep. Glorioso said may certainly would help with that, but practically, how are we going to enforce this? Because now I've got a written contract that's signed by the consumer, and now if something comes up and they've solicited these services, or they said that they can handle insurance claims handling prior to it being signed, but we really don't have that recorded somewhere. They weren't using the iPhone or whatever, or their phone to record the initial conversation. I mean, how are we actually enforcing this?
Well, I think enforcement is indeed a possibility, but one thing, if I could just step back just a moment, in reference to Rep. Glorioso's suggestion, I believe one of the amendments that they're speaking of is going to address the.
So we have amendments on?
I think they were.
No, we're going to work on those.
No, it's just a suggestion going forward.
There's a suggestion moving forward that this committee adopt an amendment that would remove the specificity of the language where it only deals with a particular type of contractor and only a particular type of a insurance claim. So to go to his.
You're talking about what Rep. Glorioso
Yes,
talked about. I got you.
So I think the conversations we had very briefly yesterday were to allow a broader scope of enforcement in this, where it would be any type of insurance claim and any type of contractor, not specific to roofing or a particular licensure type.
All right, I understand that aspect of it, but I guess to the chairman's one of his points, when you're saying prior to the initiation of the claim, are we, how are we going to know whether it was prior or subsequent, or how just from a practical standpoint, how are we going to enforce that with that language in there?
That's a very fair question, Rep. Jordan. I think the best answer that I can give you is just like anything that we would do in an enforcement or investigative capacity or authority, it's going to come down to the documentation that's available to prove such an allegation. It's going to be, I don't want to say it's going to be easy, but I don't think it's going to be extremely challenging. Most of the predatory type contracts that we see at the contractors board, and we do a lot of co-work, I guess you could say, with the Department of Insurance. These contracts are often extremely clear as to that the contractor itself is, they really state that they're going to work as their adjuster on behalf of that. So some of them will be more challenging than others, and there are some similar languages in place right now. This, we think, is a little bit stronger to help address that problem. We're just hoping that we can do a better job of finding a way to enforce that.
All right, no problem.
But
Thanks,
without
sir.
it there to enforce, we're kind of hanging.
So, and you may not be able to answer this, but just to give you a scenario, so after a hailstorm, or sometimes we see neighborhoods flooded with salesmen even when there's really not a storm. So if we were handing out door hangers that said insurance, ABC Roofing, insurance claim specialist, this law would prevent that. But if we had ABC Roofing, free hail damage assessment, that would be, we'd be okay with that, correct?
Yes, sir.
Okay. And is that the intent of the bill, at least partially? And
it's selling the aspect of, or promising some outcome through the insurance or a claim, instead of selling or soliciting your trade or what you do, your work.
Right.
So it's leading with the insurance side of things and not with, we're the best roofer in town.
Right. Okay. Yeah. All right. No more questions. We've got a green card from Mr. Bovard. Lenny Kapowski is present in support.
Yeah, just 1 second.
Not ready to speak yet, Lenny?
No, I'm ready.
Well, we got a card from you. I think now's the time. Lenny Kapowski on behalf of Jansen Public Adjusters. If you want to go ahead and come up, Lenny.
Sure.
We've got a green card from you in support.
Yes, sir. So Lenny Kapowski, Magnolia Strategic, who representing Jansen Public Adjusters. My client is arguably one of the larger ones in North America, maybe 1, 2, or 3 offices, brick and mortar all over the country, very, very centered on commercial. So represent in throughout the year, not only during times of disaster or loss, numerous parishes, ports, airports, school boards, worked very well with the chairman in the past, so he's very familiar with our client. Total support of this. Public adjusters are there to help the insured through, many times, a very difficult process. So we do not see any need, my client, in a dual role of helping the insured through a process and then trying to profit off of their loss by coming back saying we could fix whatever and play a contracting role in that. We commend this bill, and anything we can do to help this move along, we absolutely will.
And so another part of the bill we hadn't talked too much about is it does clarify that a public adjuster can't act as a contractor on the claim he's representing. And the public adjusters are fine with that.
My public adjuster, Jansen's
Jansen's good with that.
okay with that.
Okay.
Yes, sir.
All right, we don't have any more questions. We do have some red cards in opposition wishing to speak, so let's go ahead and bring them up at this time. Joshua Lovell with Gator Roofing and Restoration, and also Mr. Jonathan Davis, Residential Roofing Association. If y'all want to go ahead and come up. Yeah. All right, we've got a personal privilege for Representative Jordan, and Vice Chair Brown wants to recognize some special guests.
Okay, well, thank you again, Mr. Chairman. Look, I had the honor and privilege a couple of weeks ago to speak to the law students at LSU in the insurance law class, and so they are here today to come and witness and enjoy some of the adventures that we do here in the legislature. So we have great students. They were very engaged, and so I'd just like to say a welcome to the Capitol to the LSU Law Students Insurance Law class. And it also they have a wonderful professor in the back there.
Vice Chair Brown.
Thank you, Mr. Chairman. I would just like to ask the chair, this morning we received some very sad news. Mr. Bubba Henry, former speaker and a long-time fixture in this committee room, passed away. He was definitely one of my heroes, and he was a long-time advocate for State Farm in this committee room. And I would just like to ask that we observe a moment of silence.
Yeah, moment of silence in memory of Bubba Henry.
Thank you.
Thank you, Vice Chair Brown, for bringing that to our attention. And thank you all so much for being here. And you see, insurance committees where all the action is. All right, and so back on House Bill 121, we've got Mr. Davis and Mr. Lovell in opposition. Just whichever one of you would like to start, introduce yourself to the committee.
Sure. My name is Jonathan Davis. I'm a board member of the Residential Roofing Association of Louisiana. I wanted to come today and just speak to the committee about my concerns with the bill. Really, I think my biggest issue is it feels ambiguous. It says claim handling, claim processing, and I know we've been speaking about the different things that roofers do after a storm. I think it's obvious why a roofing company would want to go walk door to door after a storm is because there's damage on the roofs, and that's how we make money. That's how contractors work. I know that there are a lot of problems with the insurance process, roofing companies meeting deductibles or whatever else, but I think this bill is going to hurt the contractors that already do everything correctly with the process. I think contingency agreements are good because whenever we work on a claim, and I don't mean handling the claim, but I mean doing a damage assessment for the adjusters, sending in a bid with Xactimate, which is their preferred estimating program, identifying what brand of shingle it is. I don't think that has anything to do with debating insurance policy, interpreting insurance policy, and I don't think explaining what a deductible is to a homeowner should be considered public adjusting, just like I can tell you that there's an engine inside of a vehicle without being a mechanic. So I don't see the correlation there, and I know somebody testified earlier that this may not do that, but because of the way it's worded and how ambiguous it is, I feel like whoever's enforcing this may not always be the same person enforcing this, and they may have a different opinion in the future. So I would like to really define what claim handling and insurance processing mean whenever we're talking about this. I also kind of feel like it imposes on the First Amendment, freedom of speech. how are you going to prevent us from talking to somebody about whether or not they can file an insurance claim? I don't think that that has anything to do with being a public adjuster. If you have insurance and you have damage and you think it may be over a deductible, I don't think that's interpreting a policy. I think that's just normal life, everyday life. So that's really most of the points that I wanted to make. I'm open for questions. Josh is here with me. I know him real well. Josh, if you want to say anything, you're welcome to, but if not, I'm happy to take any questions.
Mr. Lovell, would you like to address the committee?
Yes, just
And
on some-
identify yourself for the committee, please.
My name is Josh Lovell. I'm the sales manager and project manager with Gator Roofing, and that's who I am. So what I want to talk about, what I've sat here and heard, and I'm going to try to dumb it down a little, forgive me for that, but the actual talking to a client about insurance, and that's kind of a gray zone, because I would say that 80% of the people I sit in front of, and it doesn't matter their age, older, younger, Gen Z, X, whatever, when you start talking about insurance and you have found damage on a roof, the first thing they look at you is they say, what do I do? What do I do? So, of course, you say, well, the first thing we're going to do is what type of damage you have, whether it be wind or hail or hurricane damage, whatever, we're going to file a claim. So when you're filing a claim, there are different claims, meaning you have different deductibles for wind and hail versus your hurricane. Again, people get into this and they truly have no idea what they're doing. And somebody said earlier, they just kind of push it off on you and say, God, look, could you just take care of this for me? Because I don't want to deal with the insurance. I don't like insurance. I don't like talking to adjusters. I get upset. So if that becomes illegal for us to do, to me, you're just giving all the power to the insurance companies to say, we're going to make the calls. And I go to enough adjuster meetings where I see things by insurance companies and I'm like, wow, they're not approving this. It's not enough damage, and then you reverse that and you just let the homeowner deal with it that doesn't know they can fight it. They can ask for a second opinion. They can have another adjuster meeting. Is that acting as anything but just trying to help somebody? I mean, that's the part I really don't get. If we can't even talk about any of the process, then you're just giving all the power to the insurance company. And do you trust insurance companies like that?
Thank you. We've got a question from Representative Bagley.
Thank you, Mr. Chairman. Mr. Davis.
Yes.
You are a contractor and a roofer. Did I hear you say that?
That's correct, yes.
Sir?
That's correct, yes.
Yes, and how long have you been a contractor?
A little over 2 years.
And how long have you been a roofer?
I started the contractor business with the roofing company, so a little over 2 years.
So you're providing testimony against this bill with 2 years' experience.
So I've owned a company for 2 years as a contractor roofer, but previously I worked for another roofing company, so I did have some experience there before I became my own contractor.
I understand. And sir, how long have you been a roofer?
I've been in this profession for about 8 years.
I would say that I was an insurance agent, and I got out of that. But before being in the insurance business, I was a homeowner, and it had been a long time. And I never had the issue that you mentioned about I don't know what to do, I don't want to handle it. I always just call my insurance agent and say, look, I've got damage. What would I proceed? And they would always give me that answer. I did the same thing when I was an insurance agent. I'm sure my seatmate here, who is an insurance agent, did the same thing. I'm not sure that, I think when we add more people in the mix, especially outside people, that we end up having people that are not knowledgeable, be told things that are not true. And that's my part of this. I just don't think that, in opposition to what you said, I think that most people try to find out the answers. My mother's 95. She's going to ask you a lot of questions. She's going to check.
I didn't say they didn't ask questions.
I mean, she's going to go she'll know who to go to, because sometimes she'll call me. Who do I call? So I'm not sure that the testimony you gave was much to make us change our opinions about how this goes, but I do appreciate it, and thank you, Mr. Chairman, for the time.
Thank you. Representative Phelps for a question.
Thank you, Mr. Chairman.
for clarification, did I hear you all say, I think you were speaking first, sir, you filed the claim for the homeowner?
No,
When
but
you-
our contingency agreement is based upon whether or not the claim gets approved by the homeowner, or I'm sorry, by the insurance company. So whenever we work with the homeowner and they file a claim, we agree to meet the adjuster, because most adjusters, including one of the ones that's here today in the hall, continuously meets with us on claims and enjoys us being there to help him with the damage assessment for the roof, which is something a construction company is obviously qualified to do.
So you're acting like a liaison between the homeowner and the insurance company?
I don't know if I'd say liaison, but definitely to help find the damage that the insurance company would obviously need to justify whether or not a claim is reasonable.
Okay, and I'm not familiar with your process here, so I'm just,
Well, every roofing company works different, and there are a lot that I'm sure are doing things that are shady. A lot of roofing companies get that stigma, but I've tried my very best to follow the law to the best extent of my knowledge. Our company doesn't need deductibles. All the things that roofing companies get accused of, I've tried my very best to avoid, and that's why I'm on the board for the association.
And so-
I would like to help push legislation that would help get rid of the roofing companies that are not being honest and not playing the game. I just think that this language is too ambiguous to do that task.
and those roofing companies that you were referring to, this bill will help address that problem, what you think?
I'm sorry, can you repeat the question?
The roofers that are not going, that are the good actors, so you stated in your last comment, you know that some roofers are somewhat of bad actors that do not abide by the law. You say you know there are some
Correct. So
companies.
I know
okay.
there are good and bad companies,
Right.
just like every industry. Correct.
So
yeah.
those
but I
bad
think
ones-
that this would hurt everybody, not just the good or not just the bad actors.
Okay, so do you think this bill will address the bad actors as it is intended to do?
I believe it will help if the enforcement actually works, but if the good companies are the only ones that are going to follow the law and the bad companies are going to ignore this anyway, and there's no real way to enforce it, then you are only hurting the good companies.
Okay, thank you.
Thank you. And look, let me say this. I'm very sympathetic to what I'm hearing, because I've been there. And look, when you say, Mr. Lovell, I'm going to fight for my homeowner, I get it, but that is outside the scope. That is outside of what you're licensed to do. And there's other avenues for the homeowner to take if there's a dispute. I mean, look, let's face it. What's happening here is the good actors are victims of the bad actors, and you've got roofers who find damage on every roof. They never get on a roof that doesn't need to be replaced, and they're supplementing every claim, whether supplemental work was done or not. Okay, I mean, we've got a big problem in your industry, and I think we've got to get back to roofers being tradesmen and not salesmen. And look, sales is part of it, but you got to, you got to go back to selling based not on the fact that you can cover the deductible, but that you do quality work and that roof's going to be there for 30 years. So, Representative Henry has a question for you.
Certainly.
I'm sorry. Thank you, Chairman. Rep. Memberg was distracting me. Pretty typical. But anyway, so are you, from the comments that both of you gentlemen have made, it sounds like we're describing something that there's already a vessel for. We already have a position for that. Are you aware of that? It would be a public adjuster. You can hire that if in your case, if the insured is not okay with what's happening and what's going on, you could have them reach out to a public adjuster. But the contractor is not licensed as an adjuster. Am I correct?
That's correct.
And so my point is, they're almost circumventing without this bill. They're circumventing the current law and being a public adjuster and a contractor.
Right. And My problem with this bill is not the intent of the bill. I don't believe that contractors should act as public adjusters, but my opinion about public adjusting is that has to do with interpreting and debating insurance policy, not sending a damage assessment to the insurance company, not sending a bid to the insurance company, not identifying shingles. I think that's all construction-related things. Whenever I studied for the adjuster exam, it didn't have anything to do with identifying roof damage. It had to do with policy interpretation. So,
correct.
I don't think that the ambiguous language here should be defined this way. I think it should be proposed as something different to identify exactly what the bill means by claim handling and processing, because I don't want to be in court one day defending sending an Xactimate estimate to an adjuster, which they appreciate because we take tons of photos during the job, we document everything, we make sure that anything we send to the insurance company is justified in our estimate, and they appreciate it. And yes, there are, like you mentioned, companies that supplement so much that it's super aggravating, and then after they finish supplementing, they go to appraisal, and if that doesn't work, they get a lawyer and sue. And I would love to take care of all that. I just don't think this has anything to do with it.
But if you have those issues, couldn't you hire a public adjuster or have that client, your mutual client, hire a public adjuster to address this issue? That's where I'm getting at. Like, we already have a vessel for it. Why are we trying to allow the contractor to do the same thing?
So in my experience, the normal homeowner that isn't super familiar with insurance has no idea what a public adjuster is, that it exists.
Well, correct. But if you're already, if you're going to sit there and tell them about their policy information and tell them about how they can file a claim, you could also tell them that they can call a public adjuster.
We can, and adding another contract to the layer of the process is really disincentivizing for a lot of homeowners. They don't want to go to appraisal, they don't want to hire a lawyer, and that's what they think public adjusting is. It's basically the same as hiring a lawyer, give or take. And not everybody wants to escalate a claim to go to that route. So I think it disincentivizes the homeowner from really being indemnified without some kind of process that also tells the adjusters they have to do a proper assessment of the claim. You know, you're trying to restrict the roofing industry more, but you're not doing anything to the adjusters to force them to report correctly. And I think there is another bill that actually says, you know, going through committee that says.
What do you mean report for the adjusters to report correctly?
So on the claim side, whenever an initial estimate gets submitted by the adjuster, the supervisor right now can take that estimate, change something, and then send it to the homeowner. And there's actually another bill that stops that I don't know if that's in the Senate committee or not, but the process is sometimes 3 people long behind the scenes on the insurance side to make a coverage decision. And the insurance companies are in the business of saving their own money, right? They have a risk assessment. They don't want to pay out more than they have to, especially whenever you have these huge groups, like you were saying earlier, State Farm and Allstate. They're not the cheapest anymore, but they're also probably the insurance company that denies the most amount of claims.
Yeah. Let's do this. Y'all keep your seats, and let's call up Jimmy Ordino with Farm Bureau. He's present and can provide information. And so, and I think this is Rep. Johnson has Speaker Pro Tem Johnson has a question, and come on, Jimmy. And while you I want to make a couple of comments. Now, look, you can, and Jimmy can answer this too, but the homeowner always has an opportunity to request a second inspection.
Certainly.
If a claim is denied, and you know, part of the problem that I see is, look, there's genuine disputes sometimes over damage, but let's face it, a lot of times contractors are advocating for the replacement of roofs that do not need to be replaced. And we go through 2 or 3 inspections, then you force the company to hire an engineer, and then you go to appraisal, and then all of that adds to the cost. All of those costs are passed on to the homeowner. So look, we got problems on both sides, and I think we've tried to address insurance company problems, and I think this bill is seeking to rein in some problems on the roofer side. So, Jimmy, I know we've got two questions for you, but Speaker Pro Tem Johnson has a question.
Is it Mr. Lovell or Mr. Lowell?
Lovell.
Mr. Lovell, thank you for being here. Thank you for testifying. What practices would this bill hinder you from performing if it was passed?
Well, I guess it's how I'm kind of interpreting it as I'm listening to it. So as far as going out and no more door knocking, no more talking about the insurance process at all with your client, even when they're asking you questions about it, you just, like, how do you handle that part? What do you say? Whoa, can't say the insurance word.
That's the way you interpret this bill to hinder you from that?
Yeah, I feel like it handcuffs a lot of roofing companies. And I get the point where, roofing companies and you get a bad rap. I get that. There's bad people in every line of work.
Absolutely.
I think we can all agree to that. But now it's popular to say that with roofing. It's probably been that way for the last 5 years. You start hearing it more and more and more.
Hurricanes.
Yeah, since hurricanes and everything.
But that would hinder the practices that you're performing now?
Absolutely. And like Mr. Was it Bagley was telling me, like his mother's 95 years old and she would have a lot of questions. I get that too. But still, like questions about the insurance or questions about the policy. And when it gets to that, as I'm sitting with a client, I can't say what I know it is, but I'm not allowed to say that. I mean, that's the part where it's not real clear with us.
Your incentive and interest when you solicit business is to find coverage to repair a roof, right? That's how you make your money.
Exactly. Yes.
So do you see where the objectivity and the interest might conflict for some roofers, not you, but some roofers?
Absolutely.
And you understand that happens?
Absolutely.
But that's how it would hinder you. You realize you couldn't go out and just random solicit possible claims anymore under this bill, if I read it correctly.
Right. So it would take our ability away to certain areas that we know had certain storm events, hailstorms, high wind, hurricane, whatever. We would not allow to go into those areas and offer people our services and talk about what we do.
You can advertise, right, and say that you're a roofer.
Yeah.
I mean, that's what you do. That's what you're licensed to do, right?
Right.
Okay.
Right.
Okay. Thank you.
Yep. Mr. Orno, you want to comment on the conversation so far?
Yeah, and I could be really brief. Jimmy Ordino for Farm Bureau. I really find myself in agreement with my friend, Rep. Jordan, I believe, on this. And really our limited purpose, and we talked to the author prior to this and had an agreement in concept to change the language at the bottom of the page to kind of take out that temporal sort of thing that you can't do it before the contract, but you can do it after. I mean, we found that confusing and hard to enforce. Although I will say, after listening to Rep. Glorioso's formulation, that probably gets to it more artfully than what we had. So if Rep. Adams is willing to work with Rep. Glorioso and I in that effort to enforce that concept, I'd appreciate it. But that's all I had. I think we do need to clean it up. We want roofers to be able to roof, and we want them to be the subject matter experts in what they do in the construction side, and have the insurance professionals that are licensed by the Department of Insurance to handle insurance claims to do the insurance things. I mean, that's pretty straightforward.
And I do think we need to clarify what insurance claims handling is. Maybe refer back to the particular statutes. Just an idea. That is kind of ambiguous, insurance claims handling. And does Farm Bureau work with roofers? I mean, if it's a steep roof, or if a homeowner says, hey, a roofer looked at it, he says I've got hail damage, typically would Farm Bureau adjusters work with those contractors, or is there an adversarial relationship there?
I mean, in any context, you can have a little difference of opinion. I mean, I think Farm Bureau generally attempts to work with its insured. If the insured says, hey, I want you to talk to this person, whoever it is. And look, I think there's some value to I mean, maybe the old-fashioned way, as Rep. Bagley would see it, but the way I think conceptually what we're trying to accomplish. I mean, if a roofer prepares an estimate and he needs to explain that estimate to the insurance adjuster, I don't see that as practicing insurance claims handling. That's him delivering his expertise. And so if an insured were to ask Farm Bureau to have that conversation, I'm sure they would. I mean, as you know, they have adjusters everywhere in the state, and they handle the claims personally.
Yeah. All right. Thank you. We have no more questions. We do have a white card. President willing to provide information from Nathan Strebeck with the Office of Insurance Fraud. If anybody had a question for Nathan. We've got green cards in support. Present not wishing to speak, Richard Tilley, LRCA, I believe. Gabriel Hester, LRLA. Present in support, not wishing to speak. Also, David Hester, LRCA. Anthony Granite, LRCA. Tommy Means, LRCA. Natalie Stewart Cooper with PIA. Clyde Boney, PIA. Jeffrey Junkus with Liberty Mutual. James Mills, One Roof. Commissioner Temple, President in support, not wishing to speak. Caitlin Murray with NAMIC. Clinton Dozot, PIA. Danielle Dozot, PIA. Again, all present in support, not wishing to speak. We've heard from Mr. Lovell in opposition. Also in opposition, present, not wishing to speak, Jordan Stage with Pelican Roofing. Caleb Franklin here representing himself. Brittany Avalaris, Ralph's Roofing. Jacob Bashea, Invest Louisiana. Daryl Jones on behalf of himself, Brandon Zachary, Grace McGee, all representing themselves. Leonard Ray, Legacy Home Services. Cody Grindle on behalf of himself. Jordan Dornquist, well, I'm sorry about that. Gator Solutions. Gabriel Jackson, A1 Construction. Aaron Hawkins, individual. Mike Norris, Southeast. All present in opposition, not wishing to speak. So we've heard all the testimony. We don't have any additional questions. I don't believe we've had a motion from the committee yet. Got a motion from Speaker Pro Tem Johnson to report House Bill 121 favorably. Is there any opposition? Seeing no opposition, House Bill 121 is reported favorably. Thank you. And I know we've got a commitment to do some additional work on the bill as well. Thank y'all.
Thank you, members.
Thank you.
Trying to get out of this. Paint dry here, and I'm way behind. Yeah, we moved to West Louisiana in summer, so I'm back with folks trying to do it. So I'm going to go back to spread over that. Of course, right? So I'll be here all the time. Yeah, man, it's fine. We're trying to figure out how big this business. Bruce still wants to. He's still working. He's kind of scary though.
Okay, members, we're going to next take up House Bill 441 by Representative Henry. Yep. You ready? Yep. House Bill 441 by Representative Henry. Ms. Johnson, introduce the bill for us, please.
Okay.
I'm sorry, it is Ms. Johnson's turn.
Thank you, Mr. Chairman. Members, this is House Bill number 441 by Representative Henry. It provides for fees collected by the Commissioner of Insurance.
Thank you, Representative Henry, on your bill.
Thank you, Chairman and members.
Vice Chair Brown's going to take the chair for a minute.
I was hoping that Rep. Abear would come and present his bill first and do all the work, and I could just come back in and pass mine right behind him. This is a companion bill with Rep. Abear's fortified bill. This bill just increases the fees collected by the Commissioner of Insurance on producers, adjusters, public adjusters, and other entities under the department's purview, and that these funds, with the companion bill of Rep. Abear, will be dedicated to fortified roofs. I'll take any questions.
The board is clear. We do have cards. We have white cards from Patrick with the department. We'll provide information. Ben Albright, independent agents, is present and would like to speak. No, you wave. Cards in support. President would like to speak. Adam Ducote, Virgil Strategies.
Wave, Mr. Chair.
Wave. Clyde Bone, PIA of Louisiana, President support, not wishing to speak. Natalie Cooper, PIA, President and support, not wishing to speak. Commissioner Temple, President and support, not wishing to speak, but he is at the table. What is that? Clinton Dozat, Accessible Insurance, PIA, President and support, not wishing to speak. Danielle Dozat, PIA, Accessible Insurance, President and support, not wishing to speak. And Jasmine Brown, GNO Inc., President and support, not wishing to speak. God bless you. Okay. Mike, we do have a card, can't read the last name. President support, and not wishing to speak. Representative Phelps.
Thank you, Mr. Vice Chair. Just for clarification, I'm just a newbie to the fees here. Could you, Rep. Henry, I'm trying to skim through the present and the change here. These are just fees that are collected that were going, and either of you can answer, to the department presently, and now we're just going to get a percentage of those increase?
They were being levied currently, but we're increasing them. Yes, ma'am.
Levied for fortified roofing?
I'm not sure what the current levy is.
That's what's present.
Yes, ma'am. Representative Phelps, Adam Patrick with the Department of Insurance. All of these fees are self-generated fees, so the Department of Insurance is unique amongst state agencies in that we completely self-fund ourselves with these fees. So this is just raising those fees that we use to fund our operations, and the residual gets reverted to the general fund by this minuscule amount in order to fund the Fortify program.
So the minuscule amount would now not go to general fund, it'll go toward the Fortified program.
This bill merely raises the fees. Representative Abear's companion bill will dedicate those raising of fees.
Just the amount of the increase will go to the new program.
Just the increase.
Yes, ma'am.
Okay, Representative Jordan, answer your question?
Just in case.
Okay, the board is clear. Representative Henry, you want to move?
I would move, yes.
Okay, we have a motion by Representative Henry to report House Bill 441 favorable. Is any objection? Hearing none, that bill is reported favorable.
Thank you, Chairman and members. Who are we coming up?
Right. Which one, Abear?
Abear.
Yeah, Representative Abear, you want to take up, what is it, House Bill 329?
Come on down.
Representative Abear.
Thank you. I want to thank Representative Henry for all that heavy lifting he just did.
Hold on, Representative Abear, let's read the bill then.
HB 329.
Let's read the bill then.
Sorry.
Staff?
Thank you, Mr. Chairman. Members, this is House Bill number 329 by Representative Hebert. It provides for the disposition of proceeds from certain taxes and fees collected by the Department of Insurance. This bill does have amendments. This is amendment set number 1410, as identified in the top right-hand corner. This amendment set has been posted online and distributed to the members. There is one amendment in this set. This amendment is technical in nature, and the amendment ensures that the administrative rules and regulations are done in compliance with the Administrative Procedure Act.
Okay, thank you, Representative Hebert, on your bill. Do we have a technical amendment, is my understanding?
Yes.
Staff, you want to read that in? She did? You did?
She just
Okay.
did. That's what, you want to bring that
Okay,
in?
Representative Hebert moves to adopt that amendment. Is there any objection? Hearing none, that technical amendment is adopted. Okay, now on your bill as amended.
Thank you, sir. All right, HB 329. This will annually dedicate the following tax and fee amounts to the Louisiana Fortified Homes Program. $5 million from surplus lines tax, $5 million from the property and casualty insurance premium tax, $1,000 from each insurer's annual financial regulation fee, $15 from each first-time license and license renewal payment for individuals licensed by the Department of Insurance, and $15 from each company appointment fee for agents and producers. Altogether, these dedications will produce an estimated annual dedication of $30 million to the Louisiana Fortified Roofs Program. You just heard Rep. Henry. His bill is a companion bill to this that it will help with the payment. The revenue collected from the premium tax and the surplus lines tax next year is projected to increase by more than $5 million each as compared to this year. So this bill only dedicates a portion of the projected growth of the revenue from those taxes to Louisiana Fortified Homes Program, which means that the revenue from these taxes deposited into the general fund will not be less than the amount deposited this year as a result to this bill. Does anybody have any questions? I guess we'll go to, that component of the bill, just to make sure everybody understands.
Rep. Henry, do you have a question? I know you wanted to move.
Yeah, since I did all the heavy lifting on my bill, I'd like to do some more lifting and move favorable for the.
I appreciate you.
All right. Rep. Phelps, you have a question?
Thank you. Just for clarification in the viewers that we may have, Mr. Patrick, Commissioner, will you just briefly state how the Fortified program works for viewers, since this is an issue that's, I think, important to the citizens? Just the brief summary of how one would apply or benefit through the insurance office.
Sure. Thank you, Representative Phelps. Tim Temple, Department of Insurance, great state of Louisiana. Currently, the Fortified Roof Program is funded through using state general funds that the legislature allocates every year. I think the first year this body allocated $30 million. Last year, allocated another $15 million. The program that we run here in Louisiana and that you support is being recognized nationally at the NAIC level. The last two conferences I attended, the Louisiana Fortified Roof Program was highlighted as a success story for mitigating future damages for citizens, for insureds. One of the things that is mentioned quite often is other states are looking to copy, not just the Louisiana, because we followed Alabama's program, but they are looking at how do they create a permanent funding source. As you know, right now, if we don't create a permanent funding source through raising fees or rededicating taxes currently collected, then we have to come back to this body every single year. And in times, when the state is flush, then you're more likely to receive funding. And then when we're in deficit years, we're less likely. So this is to create a steady, predictable funding revenue for the program, which is a benefit to the citizens directly if you do receive a grant through the program because you have a home that is now more attractive to insurance companies to want to quote. That creates competition on your home. In addition, you also get a discount discount. Every standard company or admitted company in the state of Louisiana that writes homeowners has to file a discount with the state. So there's a lot of benefits to it. This just helps, I guess, normalize the program and create a permanent funding so that the industry sees that Louisiana is committed to building and promoting more fortified roofs. The citizens see that the dollars that they pay, money collected either through the fees or taxes that they pay on their insurance premium, goes to benefit a program that they can directly benefit from.
And any information that the constituents needs with the application process or how it works is on your website. That's what I want to drive them there to your website.
I'm sorry?
I want to drive them to your website. If there are any questions about the application process or how that works, it is available clearly on your website.
Yes, ma'am, it is, and we have a dedicated team within the department that answer phone calls constantly. If people have a question, what does it take to qualify? If they have any questions around the documents they have to provide, even applicants when they become an applicant and are awarded a grant, we have people that can hold their hand, if you will, through the process to make it as streamlined as possible. And I'd like to add, I think that you may have heard the Louisiana Legislative Auditor recently did an audit on the Louisiana Fortified Roof Program, and stellar results on that. We are putting more fortified roofs on at a quicker pace in Louisiana than any of the other states that I know that have a program like this.
I'd like to add, because I was going to say that in the auditor's report, not only was it overwhelmingly satisfactory from all the grantees, but there was an average homeowner discount of 22%.
Right, and that's great.
Yes.
And I just wanted for you all to take the time to highlight that as we move forward and after session, what are we doing? I think that would be great information as we move forward. Thank you so much.
Thank you for that input.
Representative Phelps, also just for your edification and anyone who's watching at home, our website where to get directly to the Fortified site is ldi.la.gov/fortifyhomes. And there's also a link on our main homepage at ldi.la.gov.
Thank you. And since we're highlighting that, I know, there's Rep. Willard. When I referenced he earlier, he definitely has been a voice over the last 5 years for this funding. So I'm sure he supports this bill. Thank you so much.
Thank you. We have no more questions, but we do have a green card present and wishing to speak from Adam Ducote with Virgil Strategies. Mr. Ducote, if you want to come on up.
I'll wait.
He waves. So we've also got green cards in support not wishing to speak. Natalie Stewart Cooper, PIA. Benjamin Albright, Independent Agents. Clyde Boney, PIA. Clinton Dozat, PIA. Danielle Dozat, PIA. Jasmine Brown, GNO Inc. And Mike Norris, all present in support, not wishing to speak. The board is clear. I believe we've got a motion from Representative Henry to report House Bill 329 with amendments. Are there any objections? Seeing no objections, House Bill 329 is reported with amendments. Thank you.
Thank you, committee.
Good job.
On a lot of red cards. I got a white card.
438 first.
Okay.
Ms. Keith, if you'll read the bill in.
Certainly. Thank you,
House Bill 438.
Thank you, Mr. Vice Chairman. House Bill number 438 by Chairman Furman provides relative to advertising expenses and prohibits use of certain expenses in setting insurance rates.
Okay, Chairman Furman, on your bill.
Thank you, Mr. Vice Chair. Members, House Bill 438 prohibits the inclusion of institutional advertising expenses in rate calculations and prevents insurers from passing on the cost of broad, non-essential marketing campaigns to consumers. It promotes transparency and aligns rates with true operational costs. And I'll also be sure to point out that I believe House Bill 438 is in Commissioner Temple's package of bills and also Governor Landry's package of bills. So with that, I'll be happy to take any questions.
Wow. Okay.
That should end all questions right there.
Just one, can you touch on institutional advertising? Or Adam, you wanted to address that?
Go ahead.
All right. Sure. Mr. Vice Chair, so institutional advertising is defined in the bill as advertising not aimed at obtaining business for a specific insurer or providing consumers with information pertinent to the decision of whether to purchase insurance. So if it's just, Allstate and that's all it says on it, then that would be excluded from being put into the rate base. But if it is designed to inform the consumer on the insurance products or to educate the consumer, then they could include that in their rate base.
Okay, thank you. Representative Willard.
Thank you, Vice Chair Brown. You just confused me. All right, so this doesn't have to deal with the EMU or Jake from State Farm or anything like that?
If the advertisement informs the consumer, educates the consumer, then it would not be part of this exclusion. But if it's just a product placement that has no means of advertising or educating the consumer, then it would be excluded from their advertising expense.
But so some of those commercials inform consumers of different options that they could get or different coverages or benefits, additional benefits if they go with one company. Would that be included here or not?
We would have to see what the actual advertisement is to make that determination. But if it's educating the consumer, then they can include it in the rate base. This is also modeled after what Texas and California do on this matter, which are the only two states in the country that have any sort of restriction on advertising expenses being in the rate base.
We have any tangible examples of what this bill would actually cover?
It could be
as far as institutional.
Yeah, if it was sunglasses or promotional products that just have the Geico Gecko on it, then that couldn't be included in the rate base.
So merchandise?
That's just one example. I mean, also any kind of advertisement, billboard, what have you, that has no purpose of educating the consumer.
Reverend Willard, I was going to answer that question like this. IYKYK.
I don't get it.
Yeah, okay.
Oh, well, if you know, you know. Yeah. I thought you said Iowa. I didn't know where you were going with that. All right, so follow up with that.
That's at LaSalle Parish, or Grant Parish.
Grant now, but so
those in your
sort
district?
of tongue in cheek, but I would assume, and Adam can correct me if I'm wrong, that an insurance company advertisement that simply said #IYKYK would probably not, under this law, be allowed to be used in rate making. And again, they can correct me if I'm wrong in that speculation.
That is correct.
Okay. I'm really just trying to get clarity. Okay, so Jake from State Farm, that expense could be used in rate making?
Just the mere presence of Jake, no. Like Jake just coming into the screen and waving would not be allowed to be included in the rate base.
Okay, but if Jake talks about what State Farm offers as far as policy coverage, that could be included?
If he's part of their advertisement and it's educating the consumer, yes.
Okay. All right, thanks.
Thank you.
So we could get into some, I guess, gray areas where Jake and Coach Reed and Patrick Mahomes are talking about bundling
I guess that would be considered part of their educational, even though it's not really given specific details, but you would consider that.
That's correct, but they also couldn't, get Geico and have an NIL deal with any kind of LSU football player, gymnastics person or anything. It would have to be specifically educating the consumer, not just name recognition.
Okay. Commissioner Temple, before we take any more questions, did you want to address it? Or
I just would like, Tim Temple, Commissioner of Insurance, I would just say this is something that we've heard members express a lot of interest and looking at, and I think we've got a long way to go on this bill, but we certainly want to, heed members' interest in trying to reduce some of the expenses that go into rate. As you've heard mentioned earlier, there are only 2 other states that allow this or prohibit this in the rate making, California and Texas. From what we've seen, it is, again, trying to set realistic expectations. This is a very small amount that goes into the rate. 0.2%, 0.4%. I think that's what California and Texas have indicated. So it is something. It potentially has some impact on it, but I don't want anyone to be misled and think, oh, this is going to be a big driver of reductions in premiums.
And I totally understand that. I think what people see, just from my observation, is I think the top 3 carriers spend over $1 billion each in advertising. So when they see the number, it's alarming to them, but how we break that down, I guess, is another issue. Representative Bagley.
I'll thank you, Mr. Acting Chairman. I'll chime in. I always wonder when they have the football games and the Allstate net is there behind the goalpost. I know we're not learning anything about insurance there, but I would assume that would be included too.
Well, and Representative Bagley, I think that's one thing that, we do want to be mindful of if, we have Louisiana domiciled companies as well as, outside the state that do advertise in various sporting events here in Louisiana and others. There's about to be a big one this weekend in New Orleans where that company spends millions of dollars. I think we need to be mindful that we don't want to discourage companies from continuing to promote and do that type of work. So, again, I understand the intent of not passing on unnecessary or maybe burdensome advertising costs to the consumers. But at the same time, there is, I think, a general sense of, a good purpose on some of these dollars that are spent. So as we go through this bill, I want to make sure that we're all eyes open and again, don't discourage good dollars being spent in our state from an advertising perspective.
Well, and I agree with you, and certainly don't want to do that. But on the other hand, when citizens hear that we're looking at that as a way to cut their insurance down, that's what they want to hear at the coffee shop. When I go home, that's what they want to know. What are you doing? Because they know I'm on insurance. What are you doing? And I can't say that that's going to be a huge deal maker or breaker, but it is the fact that we are actively trying to work on all these things to bring their insurance rates down. Having said that, Mr. Chairman, I'm going to go ahead and move this favorable at the proper time.
Yeah. Thank you. Hold that. Representative Ilg.
Thank you, Vice Chairman Brown. Chairman Furman, obviously we're talking, I'm going to piggyback on that, and I think Commissioner Temple mentioned it as well. You got the Zurich Classic, you got the Allstate Sugar Bowl. That's just promotional items on the name. How do you, that's something they sponsor, but they do it, is that broken down by state? Or, how do you back out the dollars and say, in Louisiana, you can't use this in your rate making? Do we have any type of number of
I know it's generally a line item in the company's annual statement. I think it's the annual statement there. But again, I think that's where we can continue to work and refine this bill, and maybe we can carve out some exemptions from that so that we don't discourage that type of
just a name
promotion.
It's just a name on a tournament. It's good visual exposure to these companies, but I don't want to discourage them from coming here because those are 2 big events in my area. That I don't know if it, I think I get where you're going on this, but how does it, you can put this on other with paid actors on the plaintiff side as well? I mean, are we looking at doing something in that end as well? We're backing out showing how much the plaintiffs, when you get paid actors doing it, and you get this much in your claim. I mean, how much are we looking at other legislation? Is there other coming forward?
Not from the Department of Insurance perspective, no, sir.
All right, thank you.
Okay, Representative Helps.
Thank you. Just on the segue, thank you, Representative Eel, for that. That's why I was trying to go with this. How will we regulate that? I don't know if we've had enough data to see. I think we said we don't know how much that will bring in. It won't be very fast. But how would this look to us as legislators? What are we looking for? When we see it's not educational, how will you know that it can't be a part of the rate base if they are not following the law? Or is this just paper?
And I want Adam to add too, but one thing is the advertising cost or expense is a component of the expense portion of rate making, which currently we have and require them to be actuarially justified.
Yes,
so I think it's a good question going forward. How are we going to be able to do that if other things change with regards to how we regulate and how we approve rates? But currently, that is a portion of the expense load that they submit to the department and they have to justify for us to approve.
Well, and Representative Phelps, if I could add, Commissioner Temple mentioned earlier about the annual statements insurers file. My understanding is in these other states, Texas and California, that have the same similar exclusion, they just break that down. Instead of one line item that says advertising expenses, they have institutional advertising expenses, other advertising expenses. So that's likely how we would get them to report that to us. As far as verifying that's accurate, we have market conduct authority to go after insurers that we think are being dishonest with us, and we can request information for them to prove up all of those numbers and verify. So there are mechanisms in the law to allow us to, verify all of that information.
To figure it out.
Yes,
so
ma'am.
we don't have an idea of what we're actually trying to solve now. This is a moving forward issue. If that makes sense.
Yes, ma'am. It's not retroactive. It's
No, I'm saying now we don't know that it's, we think it's a problem. Do we know it's a problem? But we're trying to prevent it long term. It's in the research, did we know that we're trying to reduce these particular companies that, I know we said when Chairman mentioned his slogan there or whatever, that was an attorney, not an insurance company. So obviously there's some thought went into this bill of this is where we're trying to target. So I don't know if we, like Matt, when he was, Representative Willard was looking for the clarification there, what did we zone in on to see this is where we're going? Was it any particular, we don't have to name the companies.
Well, it's modeled after Texas and California, who have nearly identical language in their law. And again, those are the only two states that prohibit any sort of advertising expenses. So it's just getting us in line with those two states.
So we just want to see where this takes us, basically, where we're starting right now.
Well, Representative, I would disagree with the statement that made that this is addressing a problem. I don't necessarily see it as a problem.
Okay.
As I mentioned before, that members like yourself have mentioned prior that they wanted us to look into or address advertising costs.
Not me.
Other members then, ma'am. But again, and this is not a solution in search of a problem. This was a bill that was brought because other members of the legislature had concerns about our advertising costs being maybe unfairly allocated to Louisiana citizens.
And this was a portion of it.
And this is I think, a way to begin to address that. And this is not a bringing money in, as I said earlier. Is there some savings there? Potentially, maybe, but I don't think it's going to be substantial. I wouldn't look to say that, your rates are going to go down because we're making insurance companies not allocate their expense cost on rate making.
Okay. And going back to when Representative Eel made the comment about the sponsors, and we have an Independence Bowl in Shreveport, and of course, we over the years have tried to find sponsors, and I think, of course, there has been an insurance company. what are you looking for there if they sponsor with their community? Most companies have community givebacks. So this would be different. And how would you look at that sponsorship differently or at all?
I want to comment on some of the things that have been said. I think you make a great point, Representative Phelps and Representative Ilg, in showing and illustrating how insurance companies do contribute to their communities. I know the Independence Bowl when I lived in Shreveport was something I always looked forward to, and the Sugar Bowl is kind of iconic, I guess. The good hands there in the field goal, but Representative Carter has brought a similar bill the past, I think, every year that I've been in the legislature, and look, we've talked a lot today already about educating consumers and providing policyholders with information in regards to things like renewals and cancellations, and we want to have good information about roofs and discounts. So look, I think this bill fits with that narrative. It's not too much to ask from my perspective that, look, let's ask companies to be a little more intentional, a little more informative and educational in their advertising, and if rates are calculated in part based on expenses. And so even if we can reduce those expensive minimally, it still makes sense given where we're at in our market. And it's just the right thing to do. It's fair. We've got another bill, hopefully, that passes in regards to attorney advertising. And so, look, if we're going to ask plaintiff attorneys to advertise ethically and fairly, then I think it's only fair that we do the same thing with insurance companies. And I'm sure there'll be some opposition, but look, this is something that even if it helps ever so slightly in bringing expenses down, I think it's certainly a net positive for all of us.
And I do agree with where we're trying to go. And thank you for mentioning the attorneys, because that's what I was going to share with the Commissioner. When I say I didn't support that issue, it's because I am concerned when we start with the attorneys, which have been the last couple of years, and they're advertising, and here we are with the insurance companies. And I understand what we're trying to do, but, and then I've had the conversation, where do we go from there? And it is concerning that if we get to healthcare, will we be addressing the hospital billboards? Will we be addressing specialized physicians there? So I don't know where we're going. I just want to be very careful there, because it has been conversations, because we have to address insurance costs somehow too as we move forward with cuts and everything. So I just wanted to put that out there, that's the reason why I was asking and being very slow to move on just addressing advertising.
Right. And Representative Phelps, and I appreciate your concern on that, because I think that's a shared concern. Like I said, we don't want to, restrict or inhibit advertising dollars being spent in our state purposefully, and meaningfully. So, again, I think we can work together as this bill moves forward to create some protections so that companies can still advertise for, community benefit. And willing, I know I am, and I'm sure the author is too, to work with you.
Thank you.
Representative Green.
Thank you, Mr. Vice Chairman. Gentlemen, my question is related to basically the effectiveness of your bill. If you have in the bill institutional advertising, so this may have been touched on earlier, but who makes the determination what constitutes institutional advertising? Is that the department, or is that left up to the insurer for them to classify whatever advertising they're engaging in as institutional or not.
Yeah, so the definition, Representative Green, is in the bill, which is not providing consumers with information pertinent to deciding as to whether to purchase an insurance product or specific to obtaining the business of insurance. So what would happen is on their annual statement, rather than having one line item what they currently have for advertising expenses, there would be two, one for institutional advertising, one for all other advertising expenses. If we feel as though that the insurance company is incorrect in their reporting or just wanting to do a market conduct to see whether or not, take a sample, a couple of companies, we have market conduct authority to request that information from them so that we can verify those numbers are accurate. And, if they're not accurate, we can take regulatory action, which could be a C&D, a fine, or revocation of their certificate of authority if it's particularly egregious. So we have checks currently in the law.
So you would have the ability to scrutinize, let's say, a Super Bowl commercial.
The mathematical figures that go along with that, not or you mean as far as to whether they're actually
an ad is cut.
Yeah.
There could be a question as to whether that ad would be classified as institutional or not. And so I guess my question is, who would make that determination as to how that ad is classified as,
yes,
and then whether that ad would be on the annual report classified as an institutional expense or advertisement or otherwise?
Well, if it's questionable, I'm sure the insurance company would reach out to us to make sure we were on the same page. But if we feel as though that they were incorrect, we could take regulatory action against them. So we would make that determination if there's a question as to whether it's...
Does the department have the capability to screen advertisements to make that determination?
Currently, we do not.
So what's the effectiveness of this bill?
So again, I think that's one of the things, as we're saying, as we're working through this process, we need to
because as I'm reading it, it seems like it's just a feel-good bill. It makes me feel good that you're doing something, but in effect, it doesn't seem like you're doing anything at all, or you have the ability to do anything.
Well, as Adam has said, right now there's one line on the annual statement for advertising costs. So if they break out, if they're going to be required, then that we can and will make sure that does not go into the rate making process, the second line, the non-institutional advertising cost. And so, then if there is a complaint that's filed, or if someone, just like I know on current advertisements right now, if someone thinks that it's not meeting muster, they can file on attorney advertising. There's a review process, and I would imagine that would be the same way with the Department of Insurance. If they say, here's an ad that's running in the state, it doesn't appear to target a customer, we want to verify that this spend is not being passed on to the rate maker or to the ratepayers in Louisiana.
So the department on its own is not going to take initiative to scrutinize the institutional
ads.
Advertising ads.
I don't.
Well,
I don't
you're
see
going to rely. You're going to wait. You're going to wait to see if a complaint is lodged.
Well, we will verify that that second line item that we talked about is not being part of the rate. That would be the first.
Okay.
And then if a complaint is lodged, just like in many other complaints, we have complaints that come in constantly on all types of insurance items, and we review those.
Rev Green, we've already mentioned that Texas does this, so I'm sure they've got a process in place for determining what's could appropriately be considered institutional advertising expense.
Texas has linked. Okay, I'm sorry.
Yeah, I think it's, and Adam can comment further, but it's more or less almost a duplicate of the Texas statute, I believe, and so.
Line verbatim?
I could send you the Texas language. I had to look it up, but the Texas and California language are very similar, and that's what I based this that's what the drafter based this definition on.
But does it have institutional?
Yes,
it does.
There's a term of art used in Texas and California to describe these sorts of advertising expenses.
All right, that concludes my line of question, Mr. Vice Chairman. Thank you, gentlemen, for answering my questions.
Thank you, Representative Green. Representative Bagley. Oh. Which one? This one? Mm-hmm. Hold on, Rep. Bagley. Okay, I got it. Rep. Bagley.
I'd already asked my question. I'm not sure how my light got on.
Okay. Rep. Willard.
Thank you, Vice Chair Brown. All right, so, I thank you, Chairman Furman, for trying to do something. Couple of questions. Will this lower premiums in the state?
I think my previous testimony is I think it would be minimum impact.
Minimum impact?
Looking at the two states that currently have a similar bill, Texas and California, I think that the information that we've been able to find thus far, 0.4% is the number that seems to come to mind.
Mm-hmm. How are you going to message this to the people of Louisiana, like if this passes? Because it sounds like you can't pitch it as a cost reduction measure. So how do we position this? Say this passes, goes into law. When you go and do insurance town halls, how do you message this?
One of the things that I hear is that people are tired of being bombarded with advertisements.
But
attorney advertisements, lizard advertisements, jingle advertisements, and I think that they want to make sure that they aren't paying an unreasonable amount to be bombarded with those. And this is a response to the people saying that we want to know, how advertising costs are impacting our rates. And if the message is it's very minimum, then that is the message.
What if we took out institutional? Would that make the reductions greater?
I don't have an answer for that. I don't know what those numbers are because it's not being done in any other state.
I'm not going to oppose this or anything, but I have concern that this is simply a performative measure that really won't do anything for the people of Louisiana. I'm tired of us doing that. I really am. The people of Louisiana are tired of that. They want some relief. And so if there's a way to make this, provide some relief to taxpayers, to policyholders, to ratepayers in Louisiana, I think that's the course that we should take.
Well, and Representative, that's why in my earlier testimony, I stated very clearly setting realistic expectations. We've seen it in California and Texas. It's not even a full percentage of the rate.
So why are we trying to do it?
Well, the people have asked. As I said, as the town hall meetings that I travel around the state, the entire state, this is something that comes up often. And they have asked and referenced the advertising, and they want to know, what does it do? What's the cost? And again, sometimes people don't like the answer, but I'm still going to give them the answer. And if people are wanting an answer to be, this is going to greatly reduce your cost, I'm not going to give them that answer because that's not truthful. The truthful is it's very minimal. But they still want to know.
But if look, I would respond this way. What if it is only half of 1%? This isn't all we're doing. I mean, we've got to tackle this problem collectively and from many different angles. And hey, 0.5% may sound insignificant to you, but you pile on all these other reforms that we're doing, and collectively, it makes a difference. So, I mean, if our attitude is going to be, if this particular piece of legislation doesn't cut my rates 10%, well, guess what? We're all going to fail, and we're all going to go home because we can't get reelected. So, instead of griping that something's not cutting my rates as much as I want, why don't we say, hey, this is just one piece of the puzzle. This is a step in the right direction, and collectively, this package of bills is going to make a difference. I mean, that's my approach on this bill, and I think the commissioner is diminishing the impact of it a little bit. And again, for me, it's just about fairness and the right thing to do, and we're asking other stakeholders to rein in advertising and to do things ethically. Just makes sense for me.
I just want to make sure that the playing field is level. I want to make sure that we're prioritizing the interests and needs of the people of Louisiana, and I want to make sure that when we sell them a bill of goods, that we're being truthful and transparent. So thank you for your honesty today, Commissioner.
And look, and I'd also say this: if passage of this bill incentivizes insurance companies to be more educational and informative in their advertising, I think that's beneficial as well.
I think that's a good point, Chairman Furman, because I think Rep. Willard has a good point in that, as I said, we see billions of dollars being spent on advertising. Whether that advertising, what category it falls into, would really affect or the effectiveness of this bill. But I think maybe they go toward the direction of making sure it's more educational than the jingles and the logos. The board is clear. We do have, let me read off some cards. We have a card from Kellen Matthews. He was safe today, put in a white card. President, provide information. Adam Patrick from the department, who we have heard from. Lance Maxwell from the Governor Landry's office, President support, not wishing to speak. Commissioner Temple, who we have heard from, in support. Clinton Dozat, Accessible Insurance, PIA, President support, not wishing to speak. Danielle Dozat, PIA, Accessible Insurance, President support, not wishing to speak. Peter Robbins Brown, President in support, would like to speak. Peter, you want to come forward? Clyde Bone, PIA, President, not wishing in support, not wishing to speak. Jasmine Brown, GNO Inc., President support, not wishing to speak. Adam Knapp, Leaders for a Better Louisiana, President support, not wishing to speak. And Natalie Isaacs, Louisiana All Marketers and Convenience Store Association, President in support, not wishing to speak. Peter?
Yeah, Peter Robbins Brown, Louisiana Progress. Want to commend Rep. Furman for picking up this idea. I'll make kind of the same testimony I have for the past 3 years. And I think also just want to reiterate the point that Rep. Furman made in response to the sort of 0.2 or 0.4%. Even if it's 0.2%, even if it's 0.1%, it's part of the larger puzzle. I don't think anybody, or I hope nobody out there is expecting one bill to solve the auto insurance crisis. It's going to take a lot of different approaches. I think this one makes a lot of sense. One point that hasn't been made in this discussion is that auto insurance advertising is different than basically all other types of advertising because you're compelled to buy auto insurance. I'm not compelled to buy Coca-Cola or Miller Lite or whatever it may be. And so by compelling people to buy auto insurance, we create a massive sort of captive audience, and it incentivizes insurance companies and lawyers to spend so much money on advertising, and that cost ultimately gets passed on to the consumer. And if we're looking at ways to shave, even again, if it's 0.01%, I think that's something that we should be looking to do. And, I guess I would maybe hope that it could be even stronger, but maybe you start here and you see what the impact is. And maybe, if there is a way to, come back in a future year based on what we see out of this and make it stronger, that's certainly an option to look at. But overall, again, just think this is just a really good idea, as I've stated for, I think 4 years in a row. So happy to take any questions.
The board is clear. Thank you.
Thanks.
Okay, we do have some cards in opposition. Kevin Cunningham, APCIA, in opposition, President, would like to speak. Ben Albright with the Independent Agents, President, would like to speak in opposition. And Rodney Braxton, in opposition, and President would like to speak. I guess we'll bring you guys up first.
Gentle.
Okay, let's go first.
I'll go ahead and start. Mr. Acting Chair, Vice Chair, excuse me. Kevin Cunningham with APCIA. It's not often I get to come up here to testify against a bill that the governor likes. It's part of the governor's package, the Commissioner of Insurance package, and the chairman's carrying. So I like my chances.
Good luck. Things are looking good for you.
That's right. We also gamble. So just a couple of points I wanted to make. Anytime you limit one industry's ability to add a legitimate cost to its cost of goods, you should really think hard about why are you doing it and whether or not it's going to give you the benefits that you want. It seems counter to public policy to me just to single out one industry and say, no, we don't want you to include some cost to provide your goods or services, in this case, to Louisiana citizens. As Commissioner said, I just wanted to be on the record as far as insurers are concerned. We don't think this is one that will move the needle relative to rates. It may have a small component that will impact it, but overall, we just don't think it's going to move the needle that much. I know we talked about the Sugar Bowl. We talked about the Zurich Classic. Sugar Bowl, the Allstate Sugar Bowl, that benefits multiple charities throughout the New Orleans area. That, although I doubt very seriously if they would stop doing it because of this bill, but it certainly provides, maybe will give you some insight as to what some of this institutional, what could be considered institutional advertising, what it can do and what it looks and what it's for. Zurich Classic, they benefit the 4 Kids Foundation, and that's what that, again, could be considered institutional advertising. I know this whole session and the session prior to it, we talked about moving Louisiana into the mainstream of what other states are doing. This actually pulls us out of the mainstream, as only 2 other states do this, and we would be the 3rd state to do it. So again, let's consider that. And I guess lastly, there are some minimum savings, and this kind of goes to the second point, the point I just made. There are some minimum savings, but you really have to ask yourself, are they outweighed by the message that you're sending to the industry? The message that you're sending is that we're going to curtail you we're going to single you out and curtail your ability to include a legitimate cost in the rate structure. So with that, we think we should, why we would ask you to oppose the bill. I'd be happy to answer any questions or.
Thank you, Mr. Chairman. Is this on? Yes, it is. Green light. Rodney Braxton with ICLA. And on behalf of the ICLA, certainly I want to echo some of the comments Mr. Cunningham is making. We are not for this bill. We do not think this bill will have a substantial impact on rates. And some of the concerns raised about the philanthropic giving, advertising Allstate Sugar Bowl, Zurich Classic under this bill, that just will not be part of the rate base. And I think oftentimes we forget that insurance is a business and you advertise to get business. And we appreciate it has the language in there that as long as it is informative, it'll be okay. But it sounds like folks would rather a 30-second documentary on the merits of having insurance when we all know why we should have insurance. And to that point, I often hear and have heard before, and Peter mentioned that, insurance is different because you're mandated to have insurance. We did not, the insurance companies did not create that mandate. The legislature did. And so if people didn't want to buy insurance, didn't want to protect their assets, that would be a decision that they could make. But we don't force people to purchase insurance. The law does. And if you are sensible and you want to protect yourself, you purchase insurance. And how do you find the company that you want to give your business to? Advertising. And so we don't think that this bill, one, is necessary. 2, we think that it sends a bad message. And 3, it's not on the cutting edge of things that people are doing to improve insurance markets in their states. As has been said, only 2 of the states do it, California being one. And I think if you're paying attention to what's going on in California, not positive. Basically, they don't even need to advertise because everybody's charging the same rate. It's almost like, socialized insurance, to be quite quite honest. So this is not going in the right direction. You want to impact costs. Some of the things we've already passed through, like modified comparative fault, some things on collateral source. Those things make a difference, not this. Thank you.
Benjamin Albright with the Independent Insurance Agents. I'll be very brief. Our opposition to the bill is the same reasons that they mentioned. We just don't believe fundamentally that you should limit a reasonable business expense. The reason that I wanted to speak, though, was to kind of try to quantify a little bit. The chairman mentioned that he thought that the commissioner was minimizing the impact that this would have, and I would say that he's actually dramatically overstating the impact that this would have. Total advertising expense in Louisiana is between 0.5% and 0.7% in an average year, and that's total advertising of your rate. So if you eliminated all of advertising, it would be a 0.5-ish% decrease in your rates, maybe. And this is just institutional advertising, which is a small fraction of that. So you're talking about a very, very small amount of money, not something that a policyholder is going to notice. I do not believe that this will have a meaningful impact. And so I just wanted to put that out there. There's a lot of talk about people saying this will move your rate and this will move your rate. We are saying this will not move your rate in any significant way. And that's the only point I needed to make.
Just curious if that's going to be your same testimony in Commerce Committee on another bill.
I'm not sure I know what you. Okay. If you know, you know. I don't know. I'm not sure what you're speaking to, Mr. Vice Chairman.
Herb Green.
Thank you, Mr. Vice Chairman. So, gentlemen, my question is kind of along the same lines of what I asked the gentleman before you all, because this bill classifies institutional advertising as an expense, and then it further defines what institutional advertising is. So you mentioned Zurich or the Sugar Bowl, Allstate Sugar Bowl, things of that nature. What effect does this bill have on insurance companies if they're able to classify, well, if an institutional advertising expense is an advertising not aimed at obtaining business for a specific insurer nor providing consumers with information pertinent to the decision as to whether to purchase an insurance product? So what's the effectiveness of the bill on your clients?
Not much.
Why are you opposing the bill?
One, we think it sets a bad precedent. Why pull out? Why would you single out one industry and say you can't use legitimate advertising as part of your cost structure? That's one problem. And two is for the minimum savings that you do have.
Why penalize?
Yeah. Why would you? I mean, are you sending a different message, a worse message to the insurers, basically saying, you know what, we will continue to treat you differently in this state, which I think is counterproductive to what you're trying to do here. You're trying to get more insurers to come here and want to come here and be here, right? This seems like you're saying, well, we'll single you out when we have to. Okay. And that seems problematic.
I would say that, I mean, I think you're right that the sky isn't falling with this bill. It's not like we're here saying that this is going to blow up the industry, that it's going to be a catastrophe. I think that it's a bad public policy, just because fundamentally I don't think that you should be preventing people from building reasonable expenses into their rates. And I think that it's important to note that it is not going to have a significant impact on what people are trying to do, which is lower insurance rates for the people of Louisiana. And that's the reason that I at least rose to oppose, is just I think this is being pitched in that way by some people, and the commissioner, to his credit, tried very hard to make sure that it was clear that this is not going to have a significant impact. And I think that that is a very important point to be made. It is going to be marginal, to say the least. Policyholders will not notice an impact.
So, Mr. Albright, I know who you represent, but can you state once again who you represent?
Sure. I represent the independent insurance agents.
Now, I understand why Mr. Cunningham and Mr. Braxton are at the table and why they're voicing their opposition to it. I understand that, gentlemen. What interest does the independent agents and brokers have in this particular bill?
So again, like I said, my primary interest is in saying that this should not pull focus from the important things. There are a lot of good bills this session that could really move the needle on trying to bring us in line with other states with our cost of insurance. This is not one of them, and that needs to be very clearly noted, and that is my primary purpose in opposing the bill today.
Okay, thank you. Thank you, gentlemen.
Okay. Speaker Pro Tem Johnson.
I just want to make sure I understand. Are you saying that the advertisement cost that we're trying to get some transparency on through this bill don't have anything to do with what my constituents are paying for insurance?
No, we didn't say that.
I mean, this money's coming from somewhere. Where is it coming from?
No, I certainly wouldn't say it's not. Well, you said advertising cost. Now, as far as this bill is concerned,
expense.
Yeah, if it passes, there'll be a certain cost component that is no longer allowed to be put in the rates. Absolutely.
Which would be a disadvantage to our constituents?
No,
our voters?
certainly wouldn't be a disadvantage.
So it'd be a positive, even though it might be a small positive.
But I just, if yes, it will be
So why is anybody still asking you questions up there? It seems like that's the answer that we're looking for in a bunch of different ways. But no, this is not the modified comparative fault bill by any means.
Right.
But as we seek to do all the things that we want to do, and I've heard the term balanced, I don't say it the same way, but balanced, this would be one of those bills that maybe from a consumer standpoint, Aaron Rodgers makes a lot of money and he ain't even on a football team anymore, being State Farm spokesman.
Well, he's not the only spokesman, but you make a good point. But I will say
he may
this
be
too.
a saint, though. I saw that yesterday.
Yeah, well, he might be a football player, but he'll never be a saint. So I will say this.
And vice versa.
Yeah, I will say this to you, Mr. Speaker Pro Tem. You know, we come up here every year this bill comes up to oppose it because I don't know what business would not come and say something in opposition to legislation that limits your ability to advertise. And again, I don't know, you know, if you're going to be held accountable for the things that you pass this session as it relates to insurance, and you pass this bill, but we don't pass, mandatory, modified comparative fault or some of these other things that we know will drive costs. And costs don't go down. Insurance rates stay where they are or go up. I'm not sure that this bill is going to be of any service to you in saying, look, but I did this. I prevented the GEICO from not, and I prevented Allstate from sponsoring the Sugar Bowl. That will not move. I don't think it would move me. And so, I mean, this is a business, and we should be able to advertise.
You've been clear on that. I just as we look through all of this, and by the way, I voted against this bill for the last 3 times. Right. But
was it because of the author, or was it because of the circumstances?
Well, it's certainly in the author.
It's a circumstance.
Either time, but I appreciate your position.
Thank you.
Thank you, Mr. Acting Chair. Certainly have a great deal of respect for you 3 men, especially the 2 on the right. I've known you since I came in here. My question would be, do you think that this would cause the Sugar Bowl to quit being the Sugar Bowl?
No.
No, absolutely not.
Wouldn't.
I don't think so.
We're simply making a point that the advertising dollars spent in Louisiana on the Allstate Sugar Bowl will no longer be an expense that Allstate could use in their rates. Even though it is legitimate advertising, it's branding. It reminds people that Allstate sells insurance. So no, it wouldn't prevent. I don't think that they would stop doing it. It is, again, it sends a message to the rest of the nation and other insurance companies that maybe we don't value what you're bringing. That's our concern.
Yeah, it's really about the precedent that's being set.
I'm sorry?
It's about the precedent that you're setting, that we are okay with singling out a particular industry, in this case the insurance industry, and treating them different than we would treat any other industry or business in this state. And that seems problematic, and for the value of what you get out of it, it may be counter, yes, in the sense that, do companies, if you're on the verge of wanting to right here or not, is this sending the kind of message? I don't think it's the one that's going to tip it one way or the other, but it does say that we are willing to single you out when we think it's really important, even though it may be counter to sound business practice.
You know, I'd like to save money on my cable, but I don't want to make, tell you they can't advertise, right? Or a car or whatever. I mean,
I understand it, but you three gentlemen do understand that when we go anywhere, and this has been going on for at least 8 years, maybe more than that since I've been here, the number one things I always ask, when are y'all going to stop insurance rates from going up? And while and I understand this won't be a big mover of the needle, but it will be a move that will appear to be something that we're trying to get the insurance rates down or at least stabilize. You would certainly agree with that. I realize that, and I do understand the single out Allstate Insurance or State Farm or those when you've got the Tostados cheese bowl or, the Poland chain, and we're not really doing anything with that. I do understand that. But again, our problem, we that are elected, is to try to make a difference here with our insurance rates. And if we don't appear to be doing that, and while the average citizen's not going to know that this is a 0.4% increase, they're going to want to know why y'all didn't vote for this when my insurance rates are high. I hear it every time I go home. Every day I hear that from my own family even. They're like, Daddy, why don't you do something about that? Well, we're trying. So I do understand your position. And I understand. I'm sure you understand ours.
Absolutely.
And I do appreciate you being here today. And Vice Chair, I appreciate you letting me have time. Thank you.
Representative Phelps.
Yes, sir. Just real quickly, thank you. Thank you for the examples of the auto industry and Cablevision, and I think Mr. Cunningham actually referenced it earlier, singling out this industry. I don't know if you were in here earlier, but that I shared that same concern if it begins to be healthcare and physicians as it is now, and with insurance companies and lawyers. Tort reform was a whole nother issue, but I do understand. My colleagues and I, Representative Bagley, I just heard your comment about we all want our insurance costs to be reduced. We've had this conversation before, and I think the questions have been asked directly. How will it affect? What do we know? I even asked if it wasn't something that we started with, how do we know where we're going? But I really appreciate the other side of hearing that, and I'm sure our consumers do as well. And it's all about information. So we all have, I guess, a right to just educate them on what we're trying to do and how we're going about it. But thank you all for your comments.
Sure. Thank you.
Okay, the board is clear. We do have some cards in opposition but not wishing to speak. Logan Anderson, Progressive. Eric Berger, Gray Insurance. Shelby Dunbar, LABI. Jeffrey Junkis, Liberty Mutual Insurance, and Caitlin Murray with NAMIC, all in opposition, present not wishing to speak. Chairman Furman, you want to close on your bill?
Yeah, thank you, Vice Chair Brown. I do want to, with all these insurance company marketing experts in the room, Representative Johnson, is it the first Thursday in October? Grant and Buckeye will hold the annual Squirrel Bowl, the Squirrel Bowl, and we're looking for sponsors for the Squirrel Bowl in case anybody is interested.
Commercial, some paid.
I think it would take off nationwide. I really do.
Well, you do have an opportunity because I don't think anybody has adopted the squirrel as their mascot. So,
well, we're laying claim to the squirrel.
Farm Bureau, any takers out there, Jimmy?
We'll run a bicycle.
I mean, squirrel would be good. Everybody loves squirrels.
Great.
Except for my wife when she puts out a bird feed, but. Mr. Chairman?
Yeah, I think it's been a great conversation. Anybody that knows my position certainly knows I don't want to do anything to harm insurance companies, and I think it's been helpful for all of us to hear how much the insurance industry contributes to our communities. And for years I've coached Little League Baseball, and who is it that sponsors the teams? It's State Farm and Allstate and Farm Bureau. And so what a great conversation just to hear how the industry supports our communities. But, we understand where we're at, the severity of the crisis, and look, it's not going to hurt anything to tamp down the rhetoric on both sides if we can. Certainly not going to hurt to be more focused and intentional, informative, educational in advertising. And we're going to be asking, again, other stakeholders in this conversation to change their behavior. We may not be successful, but we're going to ask them to. So, look, I think the bill will make a difference. It will send a positive message, and no doubt about it, it will reduce expenses used in rate calculations. So just would ask for your favorable passage.
Okay, selfishly, I would like y'all to contribute more to NIL for our Louisiana college athletes. I'd support a bill to exempt that from calculation, allow you to use that for expenses, but that's another story. Okay, we have a motion from Chairman Furman to report House Bill 438. Oh, Bagley, you already made the motion? Okay. Sorry, Mr. Chairman. Rep. Bagley made the motion to report HB 438 favorably. Is there any objection to that motion? Hearing none, the bill is reported favorably. Thank you. Okay, so next we have HB 437. Ms. Keith, if you want to read that into the record.
Certainly. Thank you, Mr. Vice Chairman. Members, before you is House Bill number 437 by Chairman Furman. It provides settlement practices for claims relative to property and rentals of motor vehicles.
Thank you, Ms. Keith. Chairman Furman, on your bill.
Thank you, Vice Chair Brown. House Bill 437 strengthens consumer protections by setting clear guidelines, clarifying payment conditions, ensuring timely rental vehicle access, standardizing vehicle total loss valuation methods, and streamlining proof of loss requirements. Really four major provisions of the bill. First, it allows the insured to require reasonable proof of payment of the deductible prior to issuing payment of a holdback for recoverable depreciation. Secondly, it increases penalties for insurers failure to promptly provide first-party insureds and third-party claimants with rental vehicles. It provides that the retail cost of motor vehicle total losses is determined by generally recognized industry sources. And finally, it allows insurers to require a proof of loss form prior to issuing payment. And I'll be happy to answer any questions.
Okay, we do have a question, Representative Green.
Thank you, Mr. Vice Chairman. Chairman, we spoke aside earlier on your bill, so I'll ask a question on the record, and maybe Mr. Pratchett, you can answer it. As I appreciate the bill with respect to the submission of a proof of loss statement. So if an insurer requires that in order for payment to be made, that the insured has to provide a proof of loss statement, the bill as is currently constructed imposes a 10-day requirement to submit that proof of loss statement to the insured. Is that correct?
The 10 days applies to, and Adam Patrick with the Department of Insurance, the 10 days, 10 business days, that is relative to the insurer being able to, or being required to give that form to the claimant after receiving the claim. And then they also have 10 business days after receiving the proof of loss statement to make a decision as to whether the form was filled out in its entirety. And then if it is filled out in its entirety, that will trigger the timelines for bad faith.
Okay. What if the insurer does not provide the form within the 10-day requirement to the claimant?
Then the consumer could file a complaint with us, and we could take regulatory action against the consumer, or against the insurer, because it's a statutory requirement, and there could be,
what type of penalties would be imposed by the department if that were the case?
It depends on how egregious it is. We have a wide range of regulatory authority powers. We could issue C&Ds, we could issue fines, we could issue revoke certificates of authority to write insurance if it's a particularly egregious example or a pattern of behavior. So it would just depend on the particulars of the situation and the insurer's prior conduct.
But this falls under this particular enacted statute falls under the payment and adjustment of claims, does it not?
It's just after 22-1892, which is claim settlement practices.
And in 1892, there are provisions already enshrined in statute where if an insurer fails to abide by certain timelines that are found in 1892, there are penalty provisions in there. Is that correct?
There are penalty provisions. And the issue there, Representative Green, is there's a lot of contention as to when that trigger starts. Current law in 1892 says upon receipt of satisfactory proof of loss is the trigger. Well, it's an ill-defined term that the plaintiff side will argue is when the adjuster first stepped foot on the property or sometime thereafter, whereas the insurance company or the defense attorney could argue that it was after every bit of information that the insurance company requested, even silly questions were answered. And because of that ambiguity, the plaintiff side and defense side can stand to make a lot of money over arguing over this trigger, which ends up leaving the claimant waiting to be paid. And rather than dragging that out, this bill clearly defines if they use a proof of loss statement, submission of that completed statement and verification from the insurer is that trigger. So we're trying to clarify that, take a lot of litigation out of the system, and make things better for the consumer.
Why not specify the provisions or penalty provisions in case an insurer does not provide that form timely? Because my concern is, as a policyholder, is that I'm basically waiting to receive payment on a claim upon the insurance company, satisfying the form or providing the form to me.
Well, if they're currently waiting on payment of the claim before they get, if they're not satisfied of
in the process.
Yeah, well, it's an additional step in the process that's meant to clarify the subsequent step in the process. So I see what you're getting at as to like some kind of civil penalty, right? And that's, I guess, what you're getting at for an insurer who fails to timely give the form to the consumer. That's something we could talk about, but that wasn't really contemplated in this because we're just trying to narrowly define that trigger to make things clearer for the whole settlement process.
So now you're adding an additional step. If an insurer requires a proof of loss statement, why is that necessary? Why are we adding a potential additional step for the payment of a claim?
Well, it's adding a step, but it's also deleting a lot of steps because there's a lot of back and forth that can take place between the consumer and the insurance company as to whether, I need this additional information. The consumer submits that. Well, I need this other additional information. And because of that drug out process, the plaintiff, the consumer could hire a plaintiff attorney who then argues, well, way back here was when that trigger was supposed to start, so you're in bad faith. Whereas the insurance company's attorney is trying to argue, no, we weren't satisfied, and statute says satisfactory proof of loss. So while this is, arguably an additional step, it does alleviate the need for all those subsequent steps that currently take place in the law where they're going back and forth constantly trying to answer all the questions. It reduces it down to one standard form.
Why are we giving insurers, I guess, the discretion as to whether they want to require a proof of loss statement or not?
Some insurers may not want to use the form. We weren't trying to do a mandate with the bill.
Use a form.
I mean, you'd have to ask the industry folks about that. We were trying to avoid a mandate and just leave it as an option. But if it is used, then it would be a clear trigger.
With respect to the first portion of the bill, you're adding paragraph 7 to 1892. A reasonable proof of payment that includes a canceled check, money order receipt, credit card statement, or a copy of an executed installment plan contract or other financing arrangement that requires full payment of the deductible. What's the basis of that?
I'll be happy to answer that. And that's also straight from Texas. That's word for word from Texas law. Some other states may have it. But look, this kind of builds upon the testimony we heard on the earlier bill regarding roofers and contractors and getting around payment of the deductible. And so what this provision is going to do is to protect the homeowner from shoddy contractors and from roofers who are trying to get the job not based on the quality of their work or the ability to install a good roof, but simply by saying, I'll take care of your deductible. And so all this would do is, so some of you may know how it works, some of you may not, but the insurance companies typically on a roof claim, but on any claim, would hold back recoverable depreciation until the repairs are completed. Okay? Well, unfortunately, it's often the case that shady contractors may present a fraudulent invoice for those repairs. They may submit an invoice for work that was not completed. They may inflate it to show that work was performed that really wasn't performed. So all this would do is protect the homeowner and ensure that the repairs are being done with the proper materials, that the scope of repairs is being properly completed by asking the homeowner to provide some kind of proof of payment for those repairs that shows the deductible was paid along with the actual cash value amount of the claim.
So it requires a policyholder, as I'm reading it, the policyholder to provide that proof of payment. Is that right?
Correct.
And the way in which the policyholder will provide that proof of payment is a canceled check or money order receipt. So what would a policyholder explain to me the canceled check, the reason behind having a canceled check as proof of payment?
Showing that the amount actually paid reflects the amount of the estimate, the actual cost of repairs.
But if it's canceled, how do you know the check was negotiated?
I don't follow you.
Okay. A money order receipt. You have a money order, you just tear back the receipt. How do you know that that money order has been negotiated by just giving the person the receipt? How do you verify that?
Representative Green, if we need to develop more stringent ways to confirm payment, I guess we can. If people are willing to go to that length to present a fraudulent claim, maybe they got us, So, but look at this. These are steps designed to prevent fraudulent behavior. Covering the deductible, waiving the deductible is insurance fraud, and that's what this provision is designed to do. Again, if people are just determined to circumvent the system, they're probably going to do it. So we can be even more stringent in our language if you think it's necessary, but again, this is designed to ensure that repairs are completed properly and that homeowners are protected from unscrupulous contractors.
Okay, thank you.
Okay.
There's no chair.
We get a break.
Sorry about that. Mr. Henry, you want to take over?
The board is clear. We do have a white card from Adam Patrick, who has been at the table. Commissioner Temple is or was present and wished to speak. I think he may be outside. Jimmy Ardno, who present and support, would like to speak. If you want to come up, Jimmy. Rep. Willard, did you have a question, or you want? Rep. Willard, go ahead with your question.
Okay. Thank you, Vice Chair Brown. A couple questions. So, I know last year a bill was passed, SB 323, by Chairman Talbot. When it was presented to everybody, it was positioned as a big compromise with the industry, Louisiana Association for Justice, the commissioner, other stakeholders. my understanding is that this bill is proposing to do some things that were not included in that compromise last year, okay? And you can weigh in and let me know your thoughts on that. But, so, I guess my concern is, so you had an agreement last year that brought everybody to the table in agreement, and, you know, a year later, we're trying to go beyond that. If you want to weigh in on that.
To address that.
Thank you, Chairman.
And so, last fall, I had the opportunity to visit with some reinsurance companies, with some Lloyd's underwriters, and they identified this as the number one issue to follow up on the property reforms that we passed last session. This was extremely important to the reinsurance market, and that is why I decided to file the bill this year. I can say with 100% certainty I was not privy to any deals that were cut. I have absolutely no knowledge of any compromises. And I can tell you one thing I'm not going to do is go home to my constituents and tell them, well, yeah, I had a good idea to improve the insurance market, to bring more competition, to attract more reinsurers to the market, but lobbyists had a deal. I'm not going home and saying that. Come on, what are we talking about?
Was it just lobbyists that agreed to it? Because you said it was just lobbyists. Was it just lobbyists?
To the deal, I have no knowledge of a deal.
All right, so I'm trying to pull up. You have the bill in front of you, Chairman? Mm-hmm. All right. So if you go on page 3, line 28, it talks about the insurer may require a proof of loss statement. Prior to requiring that proof of loss statement as a prerequisite, the insurance shall file its proof of loss statement with the commissioner to receive approval. Do you think this provides certainty for the policyholder?
Yeah, I'll be happy to answer that question. Of course, you may know I've been a licensed claims adjuster for, I guess, 25 years. I would say I've probably handled 15,000 property claims over the years, most of them catastrophic claims. For the past 5 years, I've primarily worked representing homeowners in disputed property claims through the appraisal process. Earlier, I mentioned that I've also worked as a roofer, specializing in insurance claims. I've seen all sides of it, and I can tell you this, there is nothing that homeowners want more than to understand what's going on. And anything we can do to simplify the process, to make it easier for the homeowner to understand what's expected of me, what's next. And look, all this does is bring clarity to the process. I think this is absolutely great for the homeowner. Now, is it probably going to cut down on the number of lawsuits? Probably so, all right? But isn't that a good thing? I think litigation, we can all agree, drives up the cost to settle the claim. That's passed along to every policyholder. Anything we can do to reduce litigation is going to improve the environment for the people of our state. This provision of the bill will do nothing but bring clarity to the process for the homeowner.
So I would say that reducing litigation for the sake of reducing litigation should not be the goal, because a lot of litigation results because policyholders are trying to be made whole. And that is a complicated process, not just in the state of Louisiana, but across the country. How long, does this bill specify how long the commissioner has to file, how long the insurance company has to file that proof of loss with the department?
I can address that, Representative Willard. A couple things. First of all, to your point as to certainty and dragging things out, that's what this bill is trying to achieve, right? So on the plaintiff side, under our current system, because of the ambiguity, they could argue that the timeline should have started for bad faith way back whenever the claim settlement process first started. Whereas, the defense attorney would argue it was way later whenever the insurance company was completely satisfied with every minuscule question that they had regarding the claim. So both sides are able to use that ambiguity for satisfactory proof of loss to make a lot of money, potentially, at the detriment of the insurance company who's having to pay his defense attorney, which then is baked into the rates through loss cost adjustment. And the consumer losing money by virtue of having to pay an attorney at the contingency fee. What this bill would do is bring certainty to that so that the plaintiff and defense side both are not making so much money off of this ambiguity, and the insurance company would benefit through not having to litigate so many claims, and the plaintiff or the consumer would benefit from getting paid more timely. So, I think that the bill and its current posture is designed to address that and help alleviate that system, not drag it out further.
As far as the timeline for the insurer to provide that statement to the department, is that specified in this bill?
Not in this bill, but it is a form that must be filed, and there's another provision of law, I believe it's around 2216 something other. I can look it up for you and send you the language, but it essentially requires us to approve or disapprove a rate within 30 days of receiving the
So you have 30 days to approve or disapprove of it. When the insurance company gets this to you?
When the insurance company submits the form that they plan to use for their policies. And the bill also says it has to be substantially similar to the proof of loss statement that we'll prescribe. So we will put out a model form that they can more or less copy, paste, and put their logo on.
Do they have to use that model form? Would that be required in this bill?
Not necessarily, and the reason being is goes back to the UM form issue from last year that y'all passed a bill to fix, wherein a smudge on the form or misplaced comma ended up resulting in forms being deemed by some judges as being invalid and therefore affording UM coverage to a consumer who never paid a premium for it and actually opted out of it, but because of the form being just slightly off from our model form, finding coverage. So we didn't want to run into that issue here, so we're requiring it to be substantially similar, but not point for point, comma for comma, the same.
Okay. Is there a requirement on how long the time period that the insurance company has to get you the form by?
Yes, 10 business days after
10 business days. Okay. And what's the policy for allowing the ratepayer to know when that form is approved?
They have to notify the consumer.
Who, the insurance company? Mm-hmm. Do they have a timeline for that? 10
business days after receiving
the form. So that's 10 business days too?
Mm-hmm.
Okay. Any idea of how many insurance companies currently don't require a written proof of loss statement?
Well, the law in its current posture doesn't require a written proof of loss statement at all, except for in catastrophes, which happened last year with Senator Talbot's SB 323. But considering we haven't had a disaster such that that provision could be tested, that has not been tested, our current law only requires proof of loss, which, again, is ambiguous.
Okay. So as far as the timeline goes, they got 10 days to notify them. Well, you guys have 10 days to approve. You got 10 days to notify. What happens if there's a problem with the form?
Then we would disapprove the form and it wouldn't be valid.
Is that a 10-day period as well?
It's 30 days that we have to review the form. The 10 business days is them getting the form to the consumer and then informing the consumer whether or not it was completed.
So you have 30 days from receiving the form from the insurance company?
To approve or disapprove the form, and that's with any form filings.
Okay. All right. Thank you, Adam.
Yes, sir.
Okay, thank you. The board is clear. In addition to those, we have Kellen Matthews present, will provide information and support. Danielle Dozat, PIA, present, support, not wishing to speak. Clinton Dozat, PIA, Accessible Insurance, present, support, not wishing to speak. Caitlin Murray, NAMIC, present and support, not wishing to speak. Benjamin Albright, Independent Agents, and Brokers of Louisiana, President and support, not wishing to speak. Jeffrey Junkus, Liberty Mutual, Natalie Cooper with PIA, Clyde Bone, PIA, all present in support, now wishing to speak. We do have one card in opposition from Mr. Luke Williamson, Louisiana Association of Justice. Luke. Jimmy, I'm sorry, Jimmy, did you have anything that you wanted to add?
I was here to testify about a different part of the bill, but if no one has questions about it, it was about the total loss valuation. Jimmy Ordino for Farm Bureau. But if there's no questions about it, then I suppose I don't need to speak.
The board is clear right now.
We're going to go with that.
Okay, thank you. Luke? Go ahead and identify yourself.
Thank you. Luke Williamson on behalf of Louisiana Association for Justice. I want to go back and give a little historical perspective on this particular bill. 3 years ago, we began a process of trying to change the laws that affect property damage claims in Louisiana. Jurisprudentially created rules basically set forth that an insurance company had satisfactory proof of loss when they inspected a property. And the industry made it very clear to us that they wanted a date certain besides that. They didn't want the we break it, we buy it rule, where we look at it and our clock starts to tick. If you look at the amendments that were done last year where we agreed in principle with the entire committee here in the legislature, we got rid of a double bad faith statute with 1973, incorporated it into 1892. There was an agreement to permit a written proof of loss. And that's really what we're talking about here is we now have a requirement that there is a written document before proof of loss and the clock begins to tick. Now, in this particular case, we're talking about homeowners, potentially they've been unhoused by a storm. They might be staying at the river center. They don't have good access to phones. They may not have electricity. They don't have their computers. They don't have their documents. And we add an additional burden here, an additional document that they have to fill out besides the already required written loss. We have a written loss document. It is undefined, but you have an opportunity for additional steps. Now, when I was dealing in post-Hurricane Ida, we had some significant issues with proof of loss from out-of-state insurance companies. I knew at that time that the rule was you inspect the property, you're responsible for it. But many insurers would say, well, you cannot present this claim. We're not going to pay anything until you fill out a proof of loss form. I actually dealt with a Florida Insurance Commissioner proof of loss form that was presented to me. I'm not as smart as Mr. Ordino or Mr. Matthews behind me, so I had to get a dictionary, a ruler, a magnifying glass, and maybe a slide rule to figure out how to fill out that form. Ultimately, when you're submitting a proof of loss form, it's a document that's been created by the insurance company. The example that I have from that particular case is they wanted receipts for all the contents of the house. And my client's entire house had been washed away. She couldn't present receipts. We printed photographs that showed that she had a TV because they would not give her credit for a TV in her contents coverage because she did not fill out the form properly. Ultimately, we think there's too much latitude to have the insurance commissioner approve a form from the insurance company. It's our position that if it has the name of the insured, the address, the claim number, and the date of loss, that should be sufficient. Because if you've got a particular form and the person does not have access to fill out that form, or perhaps they are inexperienced in filling out forms, then it begins the process that we've all been referring to called ping pong. And that gets me to the biggest objection that I have to it. Someone fills out a proof of loss form that's been approved by the commissioner. The insurance company says that's not good enough. Well, we've got 10 days from when they make their claim to when they get their form, 10 days for them to disapprove the form, and then 60 days before they're really in bad faith. That's almost 3 months while someone is unhoused and not necessarily getting their home repaired, their roof back on, their bed and TV back in place, not returning them to the economy, not bringing a parish or a city back up with its population. This is an additional element of the ping pong game where insurance companies, many can have good intentions, but we end up with unscrupulous potential adjusters or someone saying, well, I don't have a form for this, and therefore our clock has not begun ticking. So it's not 10 days and 10 days. It's really 70, 80 days that someone could not be in their house. I will now open it up for questions.
The board is clear.
Okay.
Chairman Brown, or Vice Chairman Brown, if I could just, with all due respect to my friend, Mr. Williamson, the bill also requires that the proof of loss form be prominently displayed on the insurance company's website.
I would say that begs the question if they have internet access, whether or not can fill out that form. Because we've seen in prior storms that internet is down, phones are down. It's going to delay the process. And we had a compromise that was an agreed upon bill. Since then, we've seen 8 new insurers, I believe, enter the state because of the compromises that were made, significant compromises that were made on satisfactory proof of loss, bad faith rules, and we ask that you stand by that compromise.
Mr. Vice Chair, perhaps we could get Mr. Williamson to tell us who were the parties to the compromise were, and hey, I'll get staff to compile a list of all deals to distribute to members so we won't file any bills that breach these unspoken compromises. Maybe that should be a rule we adopt going forward. Again, I'm not going home to my constituents and telling them, man, I had a great idea. Lloyd's of London and all these reinsurance companies said, this is what you need to do to fix the problem. So I'm going to tell the guys at Fast Track Friday morning, well, we didn't do it because the trial lawyers and lobbyists had a deal. Come on. Is that what you're suggesting? So maybe on the record, tell us who the parties to the deal were.
Well, I was actually at my daughter's wedding when the deal was actually being worked on in this committee with all the people present many of the people present were here last year when that bill passed, which significantly changed Louisiana law. Respectfully, I agree that anything we can do to lower insurance rates on the record, I believe it. But I also believe we have to protect our consumers. This is not a consumer-friendly bill. I did not put a red card in on any of the bills earlier today because they were consumer-friendly. This is an anti-consumer bill, an anti-insured bill.
This is a proof of loss. This is a proof of loss that we've used as long as I've been in the insurance industry. I guess unsophisticated consumers may have difficulty filling it out. It's not that complicated. And I can tell you this, I certainly don't want to impose any undue burdens on the insured. So if you need a commitment from me to work with the commissioner or the department to promulgate rules ensuring that the process is easy, that the written proof form is readily available to the insured, even if they're out of their homes. Look, I'm on the same page with you. That's what I want as well. But and look, I'm certainly committed to make sure the form is simple and clear and easy to fill out and submit back to the carrier.
I would like to throw this out. I think language that limits what is in the form would be appropriate to consider. If it's simple, if it is not requiring tremendous documentation that someone does not have access to, I think that may be an appropriate level, and I'm not authorized for that. I do understand. I do think that the document that you have to file to get proof of loss in the current statute qualifies because you're going to have the claim number, you're going to have the address, you're going to have the date of loss. I don't know what else is on that form. I've seen much more extensive proof of loss forms in my experience.
Sounds like we have a deal.
Let me, because I did speak to the chairman before, and I agree he may not have been a part of that compromise. My concern was that this was a pretty big bill last year, and I know it went through a number of negotiations and or variations, and so I know it was something that was kind of hard to come to some sort of agreement on by the parties, and the chairman made clear to me that he wasn't a part of that negotiation, so I understand that. I think part of what you're saying is, look, y'all, we did pass a bill last year, and you thought that was agreeable to, most parties involved. I do believe that it is a concern after post-storm when you have someone that's not in their home and maybe don't have access to electricity, internet, whatever. How do we address that? I don't know. I've never handled these kind of claims, so I don't know how you would go about addressing that.
Yeah, look, I think you could, the field adjuster could bring one. You know, a lot of companies have mobile claim centers where they could have proof of loss forms available. You know, one of the first things you should do in a storm, if you've got people who are other homes, is get mailing addresses and make sure you've got contact information. So, look, we need to make it as easy as possible to get this form to them. Whatever we can do to facilitate that. I don't think it's going to be tremendously difficult to make this form available. If I was a field adjuster or an insurance company, I would make sure that my field adjusters had a stack of those forms and like that. In fact, that's one great way to explain the claim process. You sit down with them, you fill it out, claim number, date of loss, hurricane, whatever. This is what you need to do. When we get this completed form, we've got 10 days to get back to you. Man, this is a great tool to help the homeowner, especially in catastrophic situations.
And again, I'm not familiar because I've never handled a claim like this. Thankfully, I've never had to be on the consumer side of this either, as far as filing a proof of loss of this extent. What is required to show, like, that you have items that were damaged or completely a total loss? What kind of evidence do you need to put on this form?
Well, historically, before the amendment, the passage of the bill last year, the inspection by the insurance company created satisfactory proof of loss, and we understood that that was a problem for the industry. It was made very clear during the course of negotiations. Now a written document is required before the clock begins to tick. Different insurance companies are going to have different standards as to the level of evidence you have to present to them in order for a claim to get paid. Our view is that to get people back into their homes, to get people back into their neighborhoods, having that move as fast as possible is the most critical part. And an additional step, the worst part about it for me is that they could say your form is incomplete, and therefore our time does not start. Because what's going to stop an insurance company from saying, well, we're missing this on that form, whatever it may be, or we're missing the documentation to back it up? I understand their concerns, but at the same time, our goal should be to have someone who's been paying premiums for 20 years and finally has a claim to get back in their house and enjoy the benefits of the insurance policy that they bought.
Yeah, and this will facilitate that, and this will make it easier.
We do have a question, Representative Green.
Thank you, Mr. Chairman. Mr. Vice Chairman. Chairman, we talked earlier about adding language maybe to a penalty provision in the event that the insurer fails to provide the form within the 10 business days as specified in your bill. To make me feel comfortable, because I understand what you're trying to do. I have some issues with it, but I get what you're trying to do if it can kind of streamline the claims process, because ultimately I think what everyone wants is to get the individual their payment as quickly and as efficiently as possible. My concern is what happens in the event the insurance company does not provide the form within the 10 days, and there's no enforcement mechanism. And respectfully, I don't think it's sufficient that now I'm going to require the policyholder to file a complaint with the department, and a department has a wherewithal to hold an insurer accountable. So what I'd like to do is offer an amendment in concept that would subject the failure on the insurer to provide the policyholder the written or the proof of loss form within 10 days, subject to the penalties found in 1892.
Yeah, a couple of things, Representative Green. We're not requiring all carriers to use this proof of loss or to use a proof of loss form at all. So, by instituting a penalty for failure to provide a proof, then you're creating another potential problem for carriers that choose not to utilize the form. So, and just personally, based on my understanding of the process, your concern over a proof not being provided is really just is not valid for me. And what I would prefer to do is let's, by rule, make sure there's a process in place to make it as easy as possible to get that form to the homeowner. I appreciate what you're trying to do, and I know you've got the homeowner's best interest at heart, but I just don't think it's necessary at this point. Why don't we get the rules promulgated, see where we're at, and if we need to revisit it at some point, you've got my commitment to do that.
And if I could, just for a moment, Representative Green, I appreciate your concern, but with all due respect, I think my coworkers at the Department of Insurance are competent enough to ascertain whether a 2-page form was filled out properly or not. So I think we're able at the department to make that determination. Regarding the penalty, we haven't considered that, but just off the top of my head, one concern I could imagine is inflicting that penalty on an insurer could open the door for a fringe market of attorneys who specialize in putting up these billboards saying, "Did you get your form timely?" And these, a lot of lawsuits, even though the claim was paid timely, but litigation over the mere fact that the mail didn't deliver the form in time or something of that nature. So that's just off the top of my head thinking about it. I haven't had time to sit down and digest it, but that would create a whole new problem in situations where the claim may have actually been paid timely.
Well, and we're already requiring them to keep the form on the website. So it's not like there's any intentional.
But that goes back to
an intentional effort to keep the form from them. I mean, it's going to be on the website. So that's just one thing we can do to make sure the form is readily available. I would object to any amendment, even though I appreciate your, the motivation behind it.
But that is contingent upon having access to internet. And I remember, my good friend to my left, the Speaker Pro Tem, a couple of years ago when they had issues with accessibility to internet with, Suddenlink or Altice?
Suddenly, same thing.
And so if you have a disaster and the policyholder doesn't have access to internet, and, we have talked about ad nauseum how certain portions of the state don't have access to internet when there's no disaster, how do you ensure that the policyholder is going to get that form?
Representative Green, if I could, in order for any of this to trigger, the consumer has to file a claim. So if they don't have internet, they couldn't have filed the claim online. I guess they could have filled it out via mail, but the insurance company could also send proof of loss forms via mail. So I don't know that, what kind of cost burden that would be to send mail proof of loss forms in every time, and the burden it would have on the insurance company to read everyone's handwriting, because I know I can't read my own handwriting half the time. So, just a little food for thought there is in order for them to even file the claim, in most instances, they would have access to the internet.
Well, and look, you've made a perfect point that there's challenges when storms come through. I mean, people may not be living in their homes. They may not have telephone, internet, cell phones may be down. So, look, that is a burden on the insured trying to get that form out as well. So, it just seems like you're creating just another step for the whole process to fall apart. And I mean, look, whatever we can do to make that form readily available, I can assure you that I'll commit to doing that. But again, I think you're overreacting a little bit to how problematic that's going to be.
Well, my job as a lawyer is to kind of overreact. And then to figure out the worst case scenario. Mr. Williamson, you want to chime in? And Mr. Patrick, you mentioned earlier about creating a fringe market, but if I'm not correct, 1892, even if the provisions that are found in there for the payment and adjustments of claims is 30 days, an insurer can provide payment 31 days, doesn't automatically subject them to the penalties under 1892 unless the insurer is found to be arbitrary, capricious, or without proper cause. Am I not correct? So there's still a burden that has to be met by the person asking for penalties under that provision, right?
Absolutely, and I would like to point out that the bill that was passed last year gave the insurance companies a 60-day curative period after that issue became joined as well. So even if you have a issue joined with satisfactory proof of loss and it's been called out, they get 60 more days to try to evaluate it and fix it, which could take it beyond. I mean, that's almost getting to half a year is what we're potentially talking about with all the delays that are being created by additional steps and impediments.
I would just like to point out, with all due respect to Mr. Williamson, all the provisions he's referring to from SB 323 were for in catastrophe situations, not normal claim settlement practices. And none of those laws have been tested because we haven't had a disaster sufficient to trigger those timelines. So all of those. Yeah, knock on wood, no, for sure. But I just wanted to, out of clarity there, and that arbitrary and capricious standard would be determined by the judge. So depending on, how the judge rules on the facts of the matter, as to whether that 31 days is arbitrary or capricious or not arbitrary or capricious. So
I'll finish by saying this. Obviously, there are people who benefit from chaos and confusion. This is a logical, common sense step to bring some clarity to the process that will help the homeowner. For me, it's as simple as that.
Representative Phelps, did you still have a question?
A comment for the record, please. Thank you. And this happened a while back, but I did just want to say for the record, with all due respect, when we mentioned the homeowners or the consumers being unsophisticated to complete the form, I just want us to be mindful of what we're saying and what they hearing us say about them. I don't think we, just being very mindful. And the second thing, I think when we talked about stakeholders being at the table or having conversation, we were throwing out the deal like there's some backdoor deals there. And again, I'm thinking about what our constituents are looking at us to do and what they're hearing. I just want us to be very cautious about negotiation and having stakeholders at the table, which we do all the time. It's not necessarily a backdoor deal cutting there, but I appreciate the conversation having come up again. Thank you, Mr. Vice Chair.
Thank you. Rep. Bagley, Bagley for personal privilege.
Please, Mr. Acting Chairman. I want to introduce a group of students that's come here from Central Christian, the academy that is about 15 miles from my home. If you'd stand up, students. They're here to see how this works, because unless you've been in it, you have no idea what goes on. Miss Virginia Knight is their teacher. Ms. Knight and I started a long time ago, and we've talked together for many, many years. So thank you for bringing the children in. Thank y'all for coming. Mr. Chairman, Acting Chairman, thank you.
Thank you, Rep. Bagley. Representative Green, you want the floor again? No? You waive? Okay. The board is clear. You want to close, Mr. Chairman, or?
Thank you for your time.
Thank you.
Yep, I would, I guess I'll make the motion to move favorable if I can do that.
You can.
Yep.
Okay, the chair moves to report House Bill 437 favorable. Is there any objection to that motion? We do have objection from Representative Green. So the motion is to report the bill favorable. Ms. Powell, call the roll.
Chairman Furman?
Yes.
Yes. Representative Bagley?
Yes.
Yes. Representative Bamberg?
Yes.
Yes. Vice Chairman Brown?
No.
No. Representative Freeman? Representative Galley?
Yes.
Yes. Representative Glorioso?
Yes.
Yes. Representative Green?
No.
No. Representative Hebert? Yes. Representative Henry?
Yes.
Yes. Representative Ilg?
Yes.
Yes. Speaker Pro Tem Johnson?
Yes.
Yes. Representative Jordan? Representative Mandy Landry? Representative Mellerin? Representative Mena?
No.
No. Representative Phelps? No. Representative Wilder? Yes. Representative Willard? No. 10 yeas, 5 nays.
Okay, by a vote of 10 yeas, 5 nays, the motion to report favor was passed.
Thank you. Motion to adjourn.
Thank you. Motion by Chairman Furman to adjourn. Any objection? Hearing none, the meeting is adjourned. Thank you.
I know you're getting out of here.
Good job, man.
I didn't do as good as I did.
Okay, nice to meet you.
Just in a volunteer capacity.
I understand. We could, I mean, I'm throwing this out there. This is Luke talking, not LA.